Hello and welcome to Martyn Lucas Investor. My name is Sensei and you're watching the special broadcast of the FOMC report. We're going to have very important information. In about 25 minutes time, we're going to get a whole flurry of data which is going to move the market. 30 minutes after that, we're going to have Jerome Powell's speech. About 20 minutes after that, we're going to have the press conference. So a lot's going to happen in the next hour and a half. Thank you for choosing to watch our channel. Martyn's live, I'm live. You can choose who you watch with. But right now, you are with me. I'm your host, Sensei. So thank you for tuning in. Let me get straight into it. If you haven't done so already, until the end of the day, we haven't run a promotion on the newsletter like this before. It is a 50% offer on the newsletter. We've just put out a Fed Day cheat sheet, December 10th, 2025. You have everything in here. You have the timeline. Exactly what's happening when. You've got what to look out for, the rate decision, because that's the first thing you get. The statement that comes out, you get that as well, and exactly what to look for. You've got the SEP, the summary of economic projections. If this happens, what do you do? If that happens, what to look out for? What's dovish? What's hawkish? What to look out for? Then you get the dot plot. This is all coming up in 24 minutes, so you want to have this in front of you. It tells you exactly which sections to look at and what order to go down. You've then got the press conference at 7:30 UK time, 2:30 Eastern time. You get the opening statement, what to look for, the Q&A, and then you've got the charts, the technical analysis levels. What I'm looking at specifically silver, Bitcoin, XRP. I'm going to scroll through this fast so you don't see it all. And then obviously looking into 2026. This is just part of the newsletter. This is just something additional you get every single day in the newsletter. You get, let me just put it on this screen here so I don't give away too much. Every single day in the newsletter, you will get all of the stories you need. The market news, the top stock movers, the charts of the day, my insights, the one-on-one DMs, the portfolio app coming, the chart analysis app coming, all today for 50% off. And you're running out of time. You can have a look at that screen, see all the perks and benefits you get. I'll give that link. It's the first link in the description, but it's also in the live chat right now. If everyone can do me a favor, smash the like button and subscribe. It takes 1 minute. Let's see if we can beat Martyn. If everyone can just take 1 second to hit the like button. I know you're watching. I know you want the information. I'm going to give you the information. But I'm going to pause for a second. I'm waiting for you to hit the like button. I know you've forgotten. I know you're lazy. It might be hard. You might be on your TV. You might have to press a few buttons. You might not want to. But I'm not going to continue until you hit the like button. If every single person right now hit the like button, we will have more people in the show, and that will be great. So please do hit that like button. If you haven't done so already, please do subscribe. Have you hit the like button? I bet you haven't. Just take a second. It takes 1 second. Hit that like button. Okay, let's get into all of the information. Let me know you're here in the chat. Say hello in the chat so I can see who's with us. Potato Family, Yolanda, Daddy Pascal's here. Who's with us today? Brian is here. Lovely to see you, Brian. Aria is here. Welcome to the show. You've done it. Carry on, lol. Yep, you've got it. You've done it. Perfect. Okay, let's carry on. So this is the timeline of events for today. We've started our YouTube live stream. That's the first thing. You're here. You've made it. Congratulations. In 21 minutes time, we get the FOMC data. What am I talking about? It's the data drop, the decision, the headline decision. Are we going to get a 0.25% cut or a pause? Those are the only two options, and one of them is much more likely. I'll tell you right now, it's 0.25%. If we get anything other than 0.25, the markets will crash. Anything up, whether it's 0.5% cut or whether it's a pause, the markets will crash. I'll tell you the exact probabilities in a second, but we're expecting a 0.25% cut. Second, we get the statement. A statement comes out alongside this. We'll be evaluating with Bloomberg. We'll have the data coming to us as well from our own sources. So that statement is going to come to us. Martyn is going to be giving you the first magic number in a minute. So if you haven't tuned into Martyn, he'll be giving you a magic number in about a minute's time. So that's for the $2,000 giveaway. It's on the channel. It's the other show. So in about 1 minute's time, Martyn will be giving you that magic number, just to let you know. 7 o'clock UK time, 2 p.m. The time is right below me over here. 20 minutes time, you will get the decision, which is 0.25 or not. You also get the statement. You also get the SEP, and you also get the dot plot. 4 bits of data coming out at the same time. This might be the most volatile period. Remember, this morning we were talking about how the volume's really down on the S&P 500, and then when it kicks back in, because of the lower liquidity in the markets, we have bigger moves. And in seconds, we're going to have the stock market moving on this data. Normally, we don't get the SEP or the dot plot. That's only once a quarter, so it's our lucky day. We're getting both of them as well, but it can make the day a lot more volatile. At 7:30 UK time, 2:30 PM Eastern time, in less than an hour, what we're going to have is Jerome Powell taking the stage. Jerome Powell will be taking the stage. Oh, you've put your number of the like. I think this is going... Someone's donated on the other show. Someone's done a super chat on the other show. We don't care about that. If you're not doing a super chat here, we're not going to play it. That's really funny though. If you do a super chat here, we'll be playing on Martyn's show as well. Anyway, 20 minutes to go. 4 bits of data coming out in 19 minutes. In about less than an hour's time, we're going to have Jerome Powell taking the stage to give his pre-prepared, very carefully worded opening statement. Then we go on to the not so well prepared or still carefully worded, but that's when we can get a bit more insights. That's when Jerome Powell answers questions. And then later on today, you will get your debrief newsletter as well. So again, another reason to take advantage of the 50% offer. This is your full cheat sheet. We're not going through this full cheat sheet together. I'll show you parts of it. But it's so important to have something like this in front of you, so you don't get FOMO. You understand exactly what's happening at each point. You have the understandings of the trades. You have understanding of the lingo. You have understandings of what's good, what would be good to happen, what would be bad to happen. For example, a lot of people have said to me, "Oh, I'd love a 50 basis point cut." And I say to them, you would not love a 50 basis point cut because the markets will crash if we get a 50 basis point cut today. So you need to understand things like this. And the more you read, and especially with today's carefully put together FOMC, you will win. So there we go. Martyn is about to, let me go over to Martyn's show here. He's about to give you a magic number. I'm not going to play it. But Martyn is about to give you a magic number. He's just put the link in the live chat. So you can go there for a couple minutes and come straight back over here. Okay, so... Oh, we've just hit 107,000 subscribers. Wow, look at this. This is incredible. Oh, my sound effects aren't on. There we go. We'll go through the charts throughout today's show. We'll let's continue to prepare for what's about to happen. But if you've just tuned in, this is the FOMC special. 17 minutes time. We're going to get the data. We're prepared. We know what we're doing. Everyone who's got the cheat sheet, congratulations. You've still got time. You've got 17 minutes. And then you've got another half an hour until the next big event. And then you've got all the daily newsletters. Then you've got the debrief. So you can still take advantage of the 50% offer. The link is in the live chat. We would crash if we got 50. I think we'd get a pump. Yeah. See. Someone's just said in the chat, we would crash if we got a 50 basis point cut. I thought we would get a pump. Misconceptions. Incorrect. Go and read the newsletter. It is wrong. Let me just show you that part. Look at this. This is, I've put it together. This is very simple. There's more information down here, but the market consensus is a 25 basis point cut. That means the federal funds rate is coming down to 3.5 to 3.75%. Remember, in the US, it's a range. The probability of that happening, or what the market's priced in, is 88%. So, the best case scenario is we get a 0.25% cut, and then other things can go in our favor with the data and what Jerome Powell says. But step one, let's get through step one. Step one to have a good outcome of today, to have XRP pumping, to have crypto pumping, is to get through the first step. And straight away, in 16 minutes time, we'll know, have we at least gone through step one? Have we come alive since there's about 8-step process to really get a good pump. But first step is, can we get the right rate cut? So I know a lot of people think this way, more rate cuts better, but no, that is not the case. Not for mortgages, not for markets. Right now, the market wants stability, and the market's pricing 0.25%. If it gets a pause, markets will crash because only 13% of people have hedged. That's the danger zone. That's an immediate, violent sell-off. Immediate, violent sell-off. My opinions. Again, I don't give financial advice. Please do not follow my trades. Please do not buy or sell based on anything I say. I'm here to share my opinion. I'm here to show you the event. But yeah, I'm very confident that if we get a pause, I mean, this is what everyone's saying. I've studied this. I know if we get a pause, immediate, violent sell-off, we don't want to pause. If we get a 0.25 basis point cut, cool. We move on to step 2. What's step 2? Well, step 2 is the statement. So you see what this guide is telling you. Step 1, step 2, what to look out for in the statement. Step 3, Jerome Powell speaking. Oh God, something's just landed on my screen over there. Let me take that off. So again, let me go back to the rate cuts. 0.25% cut. Brilliant. Good news. Let's move on to the next thing. Is the next thing good news or bad news? 0.5%, a pause. Don't worry about moving on to the next step. The market's already in turmoil. Scenario 3, less than 1% probability. Less than 1% probability. However, if we get it, it's a recession panic signal. If it's a recession panic signal, it means the Fed are too late. They're scared. They're cutting too quickly. Something's wrong in the market. That's bearish for stocks, despite it being good for liquidity. I think there's only one person calling for this, so it's not going to go through. But yeah, this will be bearish for stocks. It will signal recession. They're reacting. They're too late. So now you know that. The probabilities are 88% chance of a 25 basis point cut. Scenario B is a 13% chance of a pause. 50 basis point is a 1% probability, but if it happens, awful. If we pause, the markets will crash. If we get a 25 basis point cut, we're all good for now. Let's quickly move on to the step 2, which is a statement. And remember, all of these 4 things come out at the same time. So you will see the market go all over the place. And then 10 minutes later, the market will digest it and then choose a direction. So be very careful with that initial move that will happen on the markets, and we'll be covering them. So if I go over here, we'll be looking at maybe the XRP, the S&P 500, stuff like that. So let me just make sure we can see everything over here as well. Yeah, we'll have the charts over here to have a look at when that happens. So remember, if you've just tuned in, thank you for tuning in. This is the FOMC report. We're going to have 2 bits of data, one in 13 minutes, the next in 45 minutes. In 13 minutes time, we're going to have a very, very good idea of what 2026 is going to look like, plus what the rest of the day is going to look like. If you have just tuned in, I have one favor. Just hit that like button, smash the like button. If you're excited, if you like these FOMC reports, if you liked us covering it, if you appreciate the channel and the work we put in, or if you don't even appreciate anything, just hit the like button. It's free. So take 1 second, hit that like button, subscribe if you haven't done so already. I'm going to wait another 5 seconds in silence until you do it. I'll stare at you awkwardly until you hit the like button. Everyone done it? Have you done it? Okay, let's move on. The statement. I'm not going to give too much away because obviously the premium members are paying for this. It's on a 50% off deal. And look, even if I was going through it, it's not as nice as having it in front of you. And remember, this is only one of the perks. This is one of the thousands of perks you're going to get this year. You're going to get these cheat sheets at every one of these events. You're going to get cheat sheets at data events. You're going to get the technical chart analysis course. You're going to get, let me bring this up on the screen. If you don't know what we're talking about, this is our very own newsletter. We don't take corporate sponsorships. We're real, we're honest, but what we do have is we're sick and tired of everyone posting fake news on X. We're sick and tired of all of the other YouTubers. We're sick and tired of people taking sponsorship from leverage trading platforms that make their audience lose money. So what do? We do something about it. We don't take corporate sponsorship. We turn down $30,000 deals, or Martyn does, so we can stay independent, so we don't sell our voice or we don't sell our channel out to these corporate sponsors. We control our narrative. This is our newsletter. Sensei.news is where you can find it. I'm going to give you a link for 50% off deal. You're tempting me with the newsletter. It's a no-brainer. I mean, we're coming into a new year. People spend money on all sorts of random things. This is a cup of coffee a week at this price, or even less. This is less than a cup of coffee a week. If you stop having a cup of coffee a week, you will get so much more intelligent in the market. And the people that read the news, the people that read the real news, not the X news, not the other YouTubers, they are more successful traders. Thanks, Sensei. I'm really loving the newsletter. Look at this special guest. Look at this. What timing. This is brilliant.
At Robert Rose 8726 donated £1.99 through a super chat. Thanks Sensei, I'm really loving the newsletter.
Wow, look at that. I mean, bought the newsletter and doing super chats about how great the newsletter is. That's got to say something. Thank you so much for the super chat and more importantly, your thoughts about the newsletter. We try and do our best. Everyone loves the newsletter. Let me go through some of the perks and benefits. Every single day, 2 hours before the opening bell, you get the newsletter to your inbox. That newsletter gets you prepared for the whole day. That newsletter is 7 hours of research. We're saving you 7 hours, and you're probably not going to do the research anyway. So we're saving you 7 hours, and we're putting it into a 5 to 10 minute read. You get the market and news headlines. You get the top stock movers, know exactly what's going on in the markets. You get a completely ad-free experience. You don't get that with any other media publication. You get my insights. I literally write my thoughts about each one of those stories. You get the chart of the day, simple technical analysis. Every single day, you get the chart I'm looking at. You get the event cheat sheets. We're talking about the FOMC one right now. You get the deep dive research. This is like 7 hours, 10 hours, weeks of research sometimes goes into deep dives. It's not just me. There's Vaz. There's other people behind the scenes that will be doing more and more deep dive research and helping with the deep dive research. You get deep dives in every single daily newsletter, and you get more deep dives coming soon as well, just separate newsletters. You get specialist emerging tech newsletters. You get exclusive XRP crypto report. We're starting an XRP weekly newsletter. It will have some other crypto news as well within it, but mainly XRP. No one does that. Forget about it. People just write absolute nonsense about crypto. If you want real news and understand what's going on, then you want the newsletter. You get one-on-one DM access. You can message me anytime, one-on-one DM. There's also a community there as well, so you can message other people, get other people's thoughts, threads. I jump in, but you can also message me one-on-one on the app. You get a budget planner and a debt planner, because if you're a serious investor, not just a gambler, you want to sort out your whole finances, not just be investing. That's coming very soon. We've got the portfolio. Special guest on the show. You got the Portfolio Insights app. That's coming in 2026.
At Potato Family 3958 donated $1.99 through a super chat. Sensei, did Martyn force you to wear a suit?
He did not, but maybe he did. Who knows? Ask Martyn. No, he didn't. Portfolio Insights app. That is going to be, that's going to be a game changer. By itself, this Portfolio Insights app that's being developed behind the scenes is going to be a game changer for people. You will get ultimate analysis on your portfolio. You'll be able to do research on your stocks. It's just a game changer. And right now, even with the price we're giving today, you're going to get it. So even if there's a price increase in the future, you will not be affected by a price increase. And better yet, it's 50% off today. You get the chart training course. That's just an additional benefit. I spent 8 years doing technical chart analysis. I've got it locked down. I know I make money. I know exactly how I use it. I use it differently to other people. Other people use trading courses to make money quickly and do leverage trades here. We don't do it. We put it together with our investing thesis. Or we put it together with our investments, our long-term buys, and put them together to really make a profitable strategy. And that's all part of the newsletter. All of those benefits plus more. If anything else comes, you'll be locked in on your price. Normally it's $220 a year. That's 60 cents a day. It is half price today. Half price today. We didn't do a Black Friday deal. We don't do these deals often. I'm going to give you the link. Let me do it. We get 6 minutes away now. We are 6 minutes away from the data. So I'm going to give you the link. If I go over here to live chat, I'm going to give you the link over here. So all you have to do is today only, FOMC day only. You also get today's cheat sheet. You can go back and look at every post. You'll get the archive of today's Fed day cheat sheet. All the numbers. We're not sharing it on the screen today because there's too much for the members, and the members pay for this. You get the whole cheat sheet for today. Everything to look out for. Why is that being a bit weird? Let me just flip that. There we go. If you click on that link, it will take you to this page over here. Type in your email. Once you type in your email, you'll be able to choose the annual plan. The annual plan will be 50% off. If you don't want to pay and you've got budget constraints, but you want to do it in the future, or you just want to get the free plan, there is still a free plan as well. There's also a monthly plan as well. But today, the 50% off on the annual plan. go and check it out. Okay, let's go back to this screen over here, and then let me explain to you again what's happening. If you have just tuned in, please do hit that like button and subscribe. Let's go over to Martyn's stream over here. Let's see what this is. Martyn live right now.
Why can't you?
Oh, I'm on my wrong account. For some reason, I don't have premium there. Okay. Numbers out in 6 minutes. Yes, it is. 5 minutes time, we're going to get the numbers. Let me tell you the rundown of the day once again. The data drops, and we're getting extra data points this time around, so it's going to be an even more volatile day, even more reason to have the newsletter in front of you. And if anyone's wondering how you do it, once you subscribe, just go to the website, and then you can go on the archive, and the archive will have every single newsletter we've ever done, and you can find your cheat sheet there. The decision will come out. So 4 things are going to come out in 4 minutes time. 1 is the decision. Is it 0.25? Is it a pause? Is it 0.5? And as I've just explained to you, don't be that person that's saying we want a 0.5, we want a 0.5, because that will cause a crash. Don't be that person that says we want to pause, because only 13% of the market is hedged for that. So we'd want to crash. Be the person that says, okay, 0.25%, I'll take it. 0.25% is the best outcome of step 1. Then all these 4 come out at the same time, so it's very hard to analyze them at the same time. The market will be all over the place. Careful when you're trading this. We also get the statement come out at the same time. We get the SEP, and we get the dot plot. So the statement is a statement from the Federal Reserve, and what we're looking for is specific wording. And again, I'm not going to give too much away here, but certain paragraphs, there's going to be 3 paragraphs. It's going to be, and I'm going to keep moving this around so no one can really cheat the system here. You get the inflation paragraph, the jobs paragraph, the risk paragraph. And within those paragraphs, what you're looking for is what's changed since last time around. And obviously, these big hedge funds, they're going to have trading bots all over that, and they're going to be picking out words, and the market's going to be all over the place, and then 10 minutes later, they're going to actually digest it and realize they were wrong or whatever. So that statement's coming out at the same time. This is critical as well. The SEP and the dot plot, critical. Why? It only comes out quarterly. So it's your lucky day today. We get the quarterly release as well. The quarterly release, this is going to give us plenty of things to analyze until Jerome Powell comes out. So as soon as this data drops, stay with us, because we've got half an hour to analyze all of this and then go into the main event of Jerome Powell. But yeah, it's our lucky day. We're getting the SEP and we're getting the dot plot. The SEP is and the dot plot only come out every quarter with the Fed. And remember, the SEP, the summary of economic projections, is then projecting into 2026. And remember, we don't always just want to focus on today. We focus on the future. It's always looking into the future. And the SEP is predicting the future. And we want to see what their predictions are. And their predictions will be about the economic projections. The dot plot, we also get at the same time. This also happens quarterly. This is where we see where the Fed think interest rates will be next week. If it's higher, then before we go, actually, that's not great for the markets. If it's lower than it is before, then the markets will like that, because more liquidity is coming into the system. If you have just tuned in 2 minutes away, I just ask you, as soon as you come in, just do the housekeeping, hit that like button and subscribe. It's very quick, very easy. So yeah, this exclusive FOMC pre-meeting report below is reserved for premium members. It is. You can get it 50% off today. You'll get the full analysis of everything. So let me just scroll through this and just show you just a few bits. So you get the SEP today. That'll be very important. What we're going to get is the GDP forecast, the unemployment forecast, the PCE inflation forecast in 1 minute and 43 seconds. So much data to cover there. The chart's going to be all over the place trying to digest all of this, but I've told you exactly what's good, what's bad, what to expect in this report. Then we move on. We also get the dot plot. The dot plot, we want to see where all the dots are, and the median dot is where the market will start expecting rates to be next year. That way we can tell how many rates are we pricing in next year. If it's lower, that's dovish, the markets go up. If it's higher, that's hawkish, the markets go. And I've told you each thing to look for. And then in about an hour's time, we're going over to Jerome Powell. So 1 minute away. If you want to have this whole newsletter in front of you while this is all going on, and also getting the after report, and getting the daily newsletter, and getting the chart course, and getting this, that, and the other. Today only, FOMC special. We don't do Black Friday. We do FOMC Day. 50% off, live chat. Go and have a look at it. I'm going to keep putting it in there. We don't do these offers all the time. This is an FOMC special. So there you go. 38 seconds and the data comes out. If you get the newsletter, just go into the archive and you'll get this whole report. Very, very important. You get all the charts I'm looking at as well, all my trade setups as well. Okay, we're getting close. Let's go over to Bloomberg, who'll be... this is imminent now. I'm going to put the playback speed up so we get it as soon as it comes out. Are you ready? Here we go. We're going to go over to breaking news now. Breaking news. We're coming with you to you in a second. Here we go. FOMC data is coming out 30 minutes later. Jerome Powell will come out. The decision is if it's 0.5%, if it's 0.5% crash, if it's pause crash, if it's 0.25%, we'll look at the other data. Here we go. Straight to Bloomberg.
Is it the European economy that's flagging?
Hit the like button, subscribe. This is live. Yes, this is live right now.
Let's get to Bloomberg's Michael McKee with that Fed rate decision.
The most divided Fed since before the pandemic voted to lower
Not
the
good.
benchmark rate by 25 basis points as investors expected.
Okay, 0.25%, divided Fed.
First time since 2019. And on the dot plot, a total of 6 members of the committee suggested they were not in favor of lowering rates. There's also a hawkish line in the statement. In considering the extent and timing of additional adjustments to the target range, bringing back language from a year ago when they paused their first round of rate cuts. No surprise, Stephen Martyn wanted a half-point reduction, but in something of a surprise, Austin Goolsbee joined Jeffrey Schmidt in dissenting for no cut at all. Next year's dot plot suggests just one
This
cut
is the dot
coming.
plot.
7 members want no move, however, including 3 who think the rate might go up. The committee statement says economic activity has been expanding at a moderate pace, and the latest forecasts show a consensus GDP figure of 1.7% for this year. But in a big move up, they have revised growth forecast for 2026 to 2.3%. Unemployment forecast to finish this year at 4.5% will fall back to 4.4% next year. Using identical language from October, the statement says job gains have slowed this year and the unemployment rate has edged up through September. Nodding to the government shutdown caused absence of data, the statement repeats that more recent indicators are consistent with these developments. There's no change in the inflation assessment. It has moved up since earlier in the year and remains somewhat elevated. However, it is seen slowing markedly next year. PCE headline from 2.9% this year to 2.4% in 2026. And as always, they won't reach their 2% target for 2 more years in 2028. Core PCE will finish the year at 3%, falling to 2.5% next year. As for the balance sheet, the statement now says reserve balances have declined to ample levels. The Fed will buy shorter-term treasuries, mostly bills, but up to 3-year notes, as needed to maintain that ample supply. The first operation will be announced tomorrow, with the first purchases on Friday of approximately $40 billion in Treasury bills. Guys?
Michael McKee, stay close as we parse through this.
Okay,
right
stay
now,
with us. We're going to be analyzing this in the background. Jerome Powell's coming out shortly.
A hawkish cut. The market is taking it slightly differently. S&P had been lower. Now it is positive by almost 0.2%. Euro dollar, euro climbing, dollar falling on the heels of what does seem to be like more Fed cuts. And across the board, 2s, 10s, and 30s, you are seeing a bid into bonds with this feeling that this is a Fed that not only is going to support rates with further rate cuts, but also with additional bond purchases. Tom.
To me, the most interesting nuance here.
Okay,
is the
not bad so
dissent of
far.
a
There's going to be
gentleman
little
from
things
Chicago.
within the
This is
data that we're going to
brilliant
cover in a
academics out of
second, but not
Milton,
too
Yale,
bad so far.
and
Hit the like button,
Massachusetts
subscribe.
Institute of Technology. Austin Goolsbee is basically our technology president. He's wired into the internet, wired into the computers, and I'd love to know if his dissent has to do with the vibrancy of AI, which leads to a better productivity, a better GDP. Let's be careful what we do.
Yeah, right now we're looking at nine votes, 4 and 3 dissents. Bob Michael of JP Morgan with us here. What's your first reaction of this decision?
Not as bad as it could have been. There could have been a lot more dissents in favor of no rate cuts. When we look at things like PCE.
Okay, look at that. It's a 9-3 vote. 9-3 vote. 3 people dissented. It wasn't massive. That's great. It shows that they're mostly on the same path. So that's good news. It's 0.25%. That's good news. Dot plot looks fine. We're going to have to now go into the dot plot, see exactly what's going on, and the SEP. Let's continue to listen in. 25 minutes until we get Jerome Powell on the stage. If I can ask you one thing, just hit that like button and subscribe. We're bringing you full coverage. We've also got our Fed cheat sheet newsletters 50% off. I'll give you the link in the live chat.
I think mostly as the market expect and nowhere near as bad as the market feared.
So not maybe as hawkish of a cut as people thought it might have been. Joining us now is Jim Bianco of Bianco Research. Jim, what's your first reaction to this decision, which, as Bob was saying, isn't as bad as it could have been? It could have been 4 dissents or 5 dissents, only 3 dissents. Is this a victory for Jerome Powell?
It's a victory for Jerome, but I'll take the other side, Bob. I'll say that it's not as good as it could have been. I was hoping for...
I'm just saying dissent is not always a bad thing, but only having 3 is pretty good. That is a win for Jerome Powell. It means they all are agreeing with Jerome Powell right now.
For a 7-5 vote.
Or most of them are.
I was hoping for a Fed that was more divided, that was more independent, that was going to send a message to the administration. You could put a guy in that wants to go to 1%, but he's not going to bully us to cut rates next year just because he's the Fed chairman. They kind of left the door open. I think that the Fed can be bullied by the next Fed chairman to do the bidding of President Trump.
Bob, you were saying that you wanted to respond.
Markets all over the place.
Not as good as it could have been with more dissents. I think if you're the administration and you're invested in this market, this is pretty much as good as it could have been, other than no dissents. I'm not sure how additional dissents make this better.
Will McKee dissent at the press conference?
Well, let's find out. Mike, you were parsing through this. You've got something to add. What do you see?
Yeah, well, the point I'd like to make is that the SEP shows that growth is going to pick up significantly next year, unemployment is going to go down, and inflation is going to go down significantly next year. So what was the rush to cut rates today if they think that's the track that we're on? I think that's going to be a key question for Jay Powell in the news conference. I think that's going to be here. Unemployment is going to that the SEP.
Let's just play that again. It looks like what the market's actually saying is, why did Jerome Powell cut rates? It looks like people are angry that Jerome Powell cut rates. People are saying the economy's great, no issues. Why did Jerome Powell cut rates? And that could be the area, that could be the reason market's coming out. And let's just listen to exactly what those SEP numbers were. Remember, the whole newsletter today is, well, you got your daily newsletter, but today you got your Fed cheat sheet as well. Everything's in here, the timeline, what to look out for, each of the decisions. So the decision, let's go through each of this. The decision was 0.25%. We predicted that, we got it right, and it was, if it was anything else, it would be a bit of an issue for the markets anyway. So that's all done. Then let's go to the statement. The statement, let's skip the statement for just a second. We're going to have more information about that coming in a second. But we've got the SEP, which is the summary of economic projections. And he just gave us a bit of a synopsis there. So if I go back to here, let's just listen to these 3 words.
SEP shows that growth is going to pick up significantly.
Growth up in 2026.
Next year, unemployment is going to go down, and
unemployment going down in 2026.
Inflation is going to go down significantly.
Inflation going down. So if unemployment's going down, inflation's going down, and growth's going up, it actually means you don't need rate cuts. The market is in a good enough situation. So what they're saying now, and what this could be the sentiment that's being projected, is, why did Jerome Powell cut rates? Well, I'll tell you why Jerome Powell cut rates, because if he didn't cut rates, the markets will crash today. And he doesn't want to leave his last few months at the Federal Reserve crashing the markets. So the reason he didn't cut rates is because the market didn't price in rates. We're going to get some more information coming in soon from our sources. We're going to get more information from Jerome Powell in 21 minutes. But if you did like the look of what I just showed you there, this is our Fed cheat sheet. We don't like legacy media. They lie too much. They are paid. They're corrupt. They have advertisers. All sorts going on there. We don't like people that think they're professionals on X giving terrible data. We don't like other YouTubers. We don't see ourselves as YouTubers. We see ourselves as a media channel. So what we do is we created our own media newsletter. Fact-checked, hours of research goes into this every single day, and we brought out a Fed cheat sheet as well. So you get a daily newsletter with everything you need to know for the day. It makes you smarter, makes you more profitable, all of that, daily newsletter. You also get the Fed cheat sheet. So this walks you through the event, exactly what to look for, what's good, what's bad. My charts, all of that. let me bring this on the screen as well so you can see exactly what I'm talking about. You get the market news headlines, you get the top movers, you get the ad-free experience, you get all my insights, you get the chart of the day, a chart every single day, hours to put the newsletter together every single day. You get the event cheat sheets like the one you just saw there. You get the deep dive research, you get the specialist emerging tech, you get exclusive XRP report. If you like crypto, you like XRP, well, you get a weekly newsletter, not just random ad-filled newsletters or just random nonsense on X, researched newsletter put together weekly. You get one-on-one DM access. You can message me any time of the day and I'll reply to you personally. There's a community in there. You can have threads, you can talk to other investors. There will be a budget and debt planning planner probably by the end of the year, a budget and debt planner. If you're investing in the markets, you need to control your budget, you need to get rid of any debt. And we help you achieve it. So you get the Portfolio Insights app. I mean, I'm not even going to get started on Portfolio Insights app because that's going to be an incredible piece of art when that comes out. And it's going to be included for the price. We might increase the price when that comes out. But right now, your price is locked. You're not going to increase in price. And you're getting it 50% off today. And you've got the chart trading course. All included. $220 a year normally. Today it's 50% off. We don't do these deals often. We don't do Black Friday. We do FOMC Day. So here is FOMC Day. Let me get rid of that from the screen. Let me give you the link and tell you exactly what to do. You see that link in the live chat right now? You press that link, sensei.news/off50. We'll just click the link. It'll take you to a page, annual plan, 50% off. It's applied straight away. Give up a cup of coffee a week and you'll become much more knowledgeable. Let me just walk you through this cheat sheet anyway. Firstly, the timeline, exactly what time everything's happening. So we got the decision, we got the statement, we got the SEP, we got the dot plot, but do not go anywhere because the main event is coming up in 20 minutes time. We've got Jerome Powell taking the stage. He will give his opening statement and he will do the Q&A. After, as well, if you sign up now, you can get this cheat sheet. Just go into the archive, you get all your newsletters. And after, you're going to get the whole debrief newsletter. Let's just take a quick look at the markets. Oh my God, look at this. The S&P 500 is pumping. S&P, okay, they're digesting. I told you, it's going to take them a little while to digest exactly what's happened. So let me go over to Bloomberg.
Over the last couple of years,
Fed says unemployment edged up through September. So this is the funny thing. Bad news is good news. The economy isn't the stock market. And this is what I explained in the newsletter. So the reason we're pumping is because we've got bad news. The reason we're pumping is because unemployment edged up through September, and that's the most recent news we would have got about unemployment. So if I go over to this newsletter over here, I've explained all of this to you. So again, we've got the decision statement SEP now. The market's digesting that. 20 minutes time, Jerome Powell takes the stage, main event, so stay with us. This is reserved for the members, so I'm not going to give too much away. The rate decision happened. We said 0.25. That's the only thing we wanted, and that's what we got. Perfect. But let me show you this bit at the bottom here. Again, you get all my charts, exactly what I'm looking for throughout this FOMC, all as part of that. Let me go down here. This is about 2026. I mean, if you read this, you'll just be an expert about FOMC, and then you'll be a bit more of an expert next time, more of an expert next time. You'll understand the economy better. You'll understand your investments better. But yeah, I've said here, the bad news is the good news. That's the paradox. Bad news is good news. The stock market is not the economy. There are two different machines that often move in opposite directions. I've just got some information coming in, so I'm going to bring that on the screen as well. This is, we've got some information coming in. I need to bring this to you straight away, actually. We've just got research behind the scenes. We've got some breaking news coming to you, so let me go over here. Okay, we've got breaking news coming to you here. The headline decision, it was 25 basis point. Why did they do this? We're breaking down the report that came from the Federal Reserve. Why did they do this? The committee is treading in a difficult needle here, balancing sticky prices against a cooling labor market, employment worries rising. The statement explicitly notes, this is directly from today's statement, that job gains have slowed. Okay, this is good. Remember, bad news is good news. Bad news is good news. Bad news is job gains have slowed. If they've mentioned that, that's good. And unemployment has edged up. Bad news is good news. That's bad news. Good news for the stock market. Crucially, the committee emphasized that downwards risks to employment rose in recent months. Bad news is good news. That's bad news. Inflation stickiness. Despite the cut, the Fed admits inflation has moved up since earlier in the year and remains somewhat elevated. Bad news. We don't want inflation up. Bad news is good news. The trade-off. The decision to cut appears to be driven in a shift of balance of risk, specifically the threat to the employment side of the dual mandate. Okay, they're worried about the unemployment going up. They've cut rates. These are the reasons they cut rates. We've just put this report together for you. I've not given the second number yet. No, that's coming soon on the show. So stay here. I'll give you the number. I mean, if you stay here, the number will come to you. This was not a unanimous... Okay, yeah. This is the dissenters. This is, remember when they just talked about not everyone agreed. The dissenters, this was not a unanimous decision. Let me just make sure I've got this line open in case any more data comes into me. In fact, it reveals a high fractured committee with dissent coming from both hawkish and dovish directions. Okay, the doves. We had Stephen. Yeah, we've said this in our report. One person wanted a 50 basis point cut. That was it. We said that in the report. There was a few that wanted less. 1, 2, 3. 3 people wanted to see no rate cuts. There are people, and remember, the issue with dissenters is actually it's a good thing. In theory, not everyone agreeing is a pretty good thing because it just means there's different opinions. Let me turn that off. That's not on this show. So yeah, dissenters, it just means people are disagreeing. More people said no rate cut. One person said 50 basis point cut. But if you have too many people dissenting, and the market might take this in two ways. If there's too many people dissenting, the market might say, actually, there's not much confidence at the Fed. No one's agreeing with each other. But this, I don't think, is a problem today because there was only 4 dissenters. 3 said hold. 1 said 50 basis point. So I don't think there's too much dissenting going on. It could have been better, but it's fine. Balance sheet. This is a report directly done behind the scenes exclusively for the people that are watching this show right now. This is part of the newsletter. Exclusively, if you're watching the show right now, no one else has this report. We've done this for you behind the scenes. Or the team, the Sensei.news team has done this. So the balance sheet and implementation. There is a significant operational pivot regarding the balance sheet. Reserves are ample. The committee judges that reserve balances have declined to ample levels. Buying T-bills, consequently, they are shifting from draining liquidity to maintaining it. They will initiate purchase of shorter-term treasury. Okay, they're buying, and that's again one of the reasons the market will be up on this. Let's go back to S&P 500. Yep, they are essentially potentially starting QE. They're potentially starting QE. What else was in this? So the balance sheets are going up. Sorry, they're buying. The reserves are ample. Okay, forward guidance. Okay, let's look at the forward guidance. The guidance remains standard but emphasizes flexibility given high uncertainty. The committee offered a no preset course, stating that it will carefully assess incoming data. Yeah, they always say that, and a balance of risk to determine the extent. Okay. Cool. Let's go to the... Okay, so now we're going to compare it against previous statement, October's FOMC. As expected, the committee cut rates by 25 basis points. Yes, they did. The new target range is 3 points. Yeah. QT balance sheet. The time bomb set off in October went off as planned. Yeah, the QT ended beginning of December. I just want to get through this very quickly because we've got 12 minutes until Jerome Powell. So I'm just going to skim through this. You'll get this as part of the newsletter. The red line analysis. Yeah, this is bad news is good news. Jobs, slightly dovish shift. So October, okay, this is very important right here. October in the FOMC report, it said unemployment rates have edged up but remained low throughout August. Today, 15 minutes ago, they said unemployment rates have edged up through September. That is the sentence that has pushed the market up. That sentence alone is why the markets are up right now. And that could be reversed with something Jerome Powell says. But that sentence there is what's pushing us up. S&P 500 up. Bitcoin is up, down on the last 5 minutes. XRP has been absolutely volatile. Remember, volume was down yesterday. Remember, watch all our shows, read all the newsletters. Earlier, we told you volume's down, so we'll get that initial reaction very, very quickly. Analysis, they moved from qualifying phrase, but remain low, signaling increased concern about the trend in unemployment. They said the risks are unchanged. So yeah, this is the part. Bad news is good news. What's the bad news? The bad news is unemployment rate. Their wording, that small change in wording sent the markets up. The dissenters are Stephen, Jeffrey, and the surprise one is Austin. joined the dissenters favoring no change. So quite there was more dissenters than Jerome Powell may have liked, but dissenting is not a bad thing unless everyone is dissenting. So that was a dot plot there. Let's go on to the dot plot and the SEP. That will be coming to us very shortly as well. So let's go back to Bloomberg. Let me tell you, I was just running through this newsletter as well. The bad news is good news paradox, so be careful. The economy, Main Street, measures the past and present. The market, Wall Street, bets on future liquidity, money supply, interest rates. Why are we in a bad news is good news regime right now? Well, right now the markets cares about one thing, cheap money. If economic news is good, strong jobs and growth, you might think that's amazing. We want the economy to be like that. Well, actually, the Fed will get scared of inflation. They will keep rates high, liquidity drops, and stocks drop. If economic news is bad, and this is that little change that we saw in that wording about unemployment, if economic news is bad, so rising unemployment or recession risk, the Fed doesn't panic, but let's say it panics. The Fed, I'm trying to make this as easy as possible to understand. The Fed panics, they cut rates and inject liquidity to save the system. That fresh cash floods into the assets and stocks fly. So all the market wants, the stock market wants cheap money to push stocks higher. Might not be great for the economy, but that's why bad news about the economy, maybe unemployment, is good news for the stock market. So do try and understand that concept as well. This is the cheat sheet you received before this live stream went live. Everything about, you got the whole breakdown of what time, what's happening. We got the 0. If you've just tuned in, if you can hit the like button and subscribe, 0.25% cut. We're waiting for Jerome Powell to take the stage in 9 minutes time. But yeah, if you are a premium member, you got all of this. The whole data, what to look out for, what to be listening for, the inflation paragraph, the SEP, what to look out for. And then obviously still there's more to come. So have this by your side. If you've already got the newsletter, just read it through so you understand exactly what moves to make. Again, within the newsletter, I've got all my charts. So if you're following charts, then just take a brief look at mine. Don't follow my trades, but at least compare it to yours. See if we are in agreement. You've got all my charts there as well. If you want that, let me go over to Bloomberg now. Let's just refresh that. If you want that today, only 50% off.
What's your impression? 9 to 3, was this?
Today, only 50% off the newsletter. I mean, I'll flash this up. If you want to see the newsletter, just pause it right now. See exactly all the perks, benefits you get. It's better than all other industry newsletters. And it's 50% off today only. Go and check it out. Daily newsletter, chart courses, cheat sheets for all of these events. You get it. Link is in the live chat. Okay, we're 8 minutes away from Jerome Powell taking the stage. Let me press play on this.
To try to rein in some of those dissents.
Sorry, not press play, unmute it. It has been playing. We are live, up to date.
Speak through that. And so I think we probably got that as well. You know, you're seeing markets respond by taking rates down. I don't think that's really anything that we saw in the statement or the SEP or the dissents. I think it really was the Fed ramping up reserve management purchases, these T-bill purchases a little bit earlier than was expected.
Matt Lazzetti, Vinky Chadha is high on the street looking at the equity markets. He says the stock market's going to go up, up, up. How do you attach Lazzetti economics to Bikram Chadha's huge equity outlook?
Yeah, I think the good thing about how we do it here, it's internally consistent. So I think Binky takes our economic growth forecasts, our global economic growth forecast, and builds that into his earning projections. We have 2.4% growth for the U.S. economy over the next year. That was sounding, I think, quite bullish relative to consensus expectations. But I would note the Fed median forecast came up to 2.3% today. I think was revised higher than what many anticipated and is now much closer to our own expectations. So I think these two things are mutually reinforcing. We see
we're
a stronger
6 minutes away now.
We see financial conditions
main
easing
event,
through
Jerome Powell's taking the stage.
Equity channel, and those two things reinforcing
Please
each other.
do share this
year.
live stream out to your communities.
Jim Reed put out a provocative question earlier this morning saying, what if the next Fed move was up? At what point do you think that the move that the Fed is laying out really sets up that counterfactual in a more real way?
Yeah, certainly a provocative question. And I think over the next year, we are getting more questions about that. And I think it's more coming from the global sphere at this point. You're seeing, places like
let
the
me know
RBA,
if you're in the live chat. Let me know.
Turn a little bit more hawkish. There's
let me know. Say hello in the live chat. I want to see
Bank of
who's
Canada
with us today.
Stronger economic data as of late. For the Fed specifically, though, I think you need two things to happen. One, you have to have a clear elimination of downside risk to the labor market. We are not there yet. There's still some fragility in this labor market over the next several months. Perhaps by the end of next year, we could get there. And two, you need the labor market to return as a source of inflationary pressure. So you need the unemployment rate to decline, quits rate to move higher, and wage growth to accelerate.
You see that statement there? Fed repeats downside risk to unemployment. We are working behind the scenes to bring you statements like that, and we brought it before Bloomberg even did. So that downside risk to unemployment rose, and that's the statement we pulled from the statement that comes out alongside the rate decision, and that's all in the newsletter. So I'm going to press live here, so we're back up to date.
But to be clear, I don't think we are there. Our baseline expectation is the next move is a cut.
Also, look at this. Everyone's saying hi.
For the Fed's next move or a move next year to be a rate hike and not a cut.
Hello, Lee. Hello, Steve. Hello, Leon. Hello, Toxic. Hello, Jim. Hello, Human Being Liz. Hello, Mahir.
And accelerate business investment.
Welcome into the show.
And consumer spending. You'd have to see a labor shortage resulting from that. And you'd have to see a wage price spiral. Maybe you'll see that in the second quarter, but right now the Fed threaded the needle. Can't we just enjoy this into the holiday season?
Come on, you know us.
That's the smartest thing I've heard today. That's the smartest thing.
Let's see what Martyn is live right now.
Years for it to go to $1,000, isn't it? So that's where we are. We're 29 times earnings now. So for every dollar the S&P earns, it costs you $29 to buy that profit. Who's buying it? No one's buying it. So what we need, what do we need for the market to continue to rise? We need inflation.
This is live right now. Martyn's live on the same channel. Let's listen in.
So stocks go up in price. Things go up in price. They're not making more money. If everyone buys Coca-Cola today and everyone buys Coca-Cola in 10 years and there's the same amount
Hi Jay, hi Stu, hi Crypto Prince, hi Eddie Boy, hi Louis.
It's making more money because the price of the Coca-Cola has gone up, so the stock has gone up. But
only 4 minutes away now.
And
Jerome Powell.
So we either have to wait for inflation to go up 2% a year. So stock market goes up 2% a year. Okay, we got that built in. What about any more? Well, then we need growth.
Oh God, there's people in the chat talking about Jake Claver. We don't care. We don't. Whether you like him or you don't like him, you're welcome on the channel. I'm just not gonna say XRP is going to $100 or $1,000. I don't care. I want to do the right thing for the audience. I want to do the right thing for the audience. If you're welcome here, Jake Claver fans, you are welcome here. You definitely are. But please, I don't really want to talk about that right now.
There is your share price. There it is. So right now, how can you buy the market at 29 times earnings?
The market is overpriced. That is right.
Especially
I do agree with
when
Martyn.
you think the market is about to unwind with the yen carry trade. So we have to consider these things. All right. So there we go. Anyway, there it is. So that's where we are today. All right. So here we are. We've got 4 minutes to go. So let's get ready. Here we go. They're on a commercial break. On standby now, we've got 3 minutes before Jerome Powell takes the stage. When Jerome Powell takes the stage, we'll be able to hear what he has to say, and then we'll get something out of it. But this will be the main part of when it swings. As you can see, as I said, I was right. If we get a 0.25...
Okay, we've just got some breaking news coming into us as we speak. So let me go over to this. Oh, that didn't even play the song. Let me do it again. Breaking news coming into us right now. Exclusive news coming to you right now from the Sensei.news team. We've got changes in SEP. So this is, remember I told you about the dot plot, the SEP. We've got 2 minutes to run through this as soon as possible. 2025 median change. Okay, so the median is unchanged. The median is unchanged on the dot plot. So that's good. I mean, we want it to go lower. If it went lower, that means more rate cuts in 2026. That has not changed. The economic revisions, significant update, bullish, no landing. Oh, it looks like we might not even have there's no chance of, look at this. The economic growth is suggesting no recession in 2026. The market is looking great. The growth is looking great. But remember, that's not great for rate cuts. Good news is bad news, actually. And in this case, good news is bad news. But it's good for the economy, which might not be good for the stock market, but they have upgraded their projections on GDP. Labor market is steady. Inflation is improved. It's dovish, so that again means you don't really need rate cuts. That's what everyone's going to be arguing. Everyone's going to be arguing inflation data was your projections. This is the SEP. You only get it once a quarter. We've analyzed it. Inflation is improving. The labor market is steady. And the growth is looking good. Why did he cut rates, Jerome Powell? That's what people will be asking. But remember, we want him to cut rates because we like the stock market. However, for the economy, it's not needed. Assessment of risk is fine. Way to the upside for unemployment. So again, the only quote within all the things we've got so far in the last 30 minutes that we've analyzed is unemployment has gone, their risk of unemployment is gone up. And for that reason, or they've worded unemployment. So Jerome Powell has come out and said the risks to unemployment are there. And he's made it sound a little bit worse than last time, which means the market is right now rallying on just that, because if unemployment's bad, that means rate cuts, and the stock market wants rate cuts. So the bottom line is, compared to September, this SEP implies a steady rate path with significantly stronger growth expectations and lower inflation, a prestige immaculate disinflation scenario. So it looks like no hard landing, no soft landing. We're going over to Jerome Powell. If you want information like that, we have a team behind us now. You've got the full cheat sheet, 50% off only today. The newsletter, 50% off only today. Go and check it out. I'm going to give you the link right now. We're going to go over to some breaking news. Link is in the live chat. The newsletter, not only do you get all of these cheat sheets for every single event, you also get the live trading course. You get the portfolio app. You get the Dutch Planner, you get the XRP weekly newsletter, you get the deep dives. Every perk we bring it to you at no extra cost. When those perks, for example, the portfolio app come out, we might increase the price. But if you get it today, it's 50% off. So here is that link. All you need to do is press it. We're going over to speech right now. Why is he not live? What I'm going to do is a little perk. Oh, here we go. Jerome Powell's taking the stage, guys. Let me unmute. Here we go. Breaking news.
Last press conference that of the year and potentially of a rate cut.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic
Please hit the like button and subscribe.
But these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September.
We've got full analysis of this
excluding
after.
the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs.
Markets pumping.
In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem.
Hit the like button and subscribe if you've just come in. Full analysis
But with
after.
downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September.
If you can hit the like button and subscribe,
please. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course.
Do you like Powell? Please spam yes or no. Do you like Jay Powell? Yes or no in the chat.
Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time.
Keep spamming it. I want to see what you guys think.
Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning, and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country.
Okay, we're going over to the press conference now. The most important part. He's done with the speech.
Everything we can to achieve our maximum.
Okay, guys, hit that like button, subscribe. We're going over to the press conference right now.
I look forward to your questions.
We've got the full report. We're going to have the after analysis, the daily newsletter, training course, 50% off today. Today only. In the live chat right now. Go and check it out.
Just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there?
He's asking the projections next year are really good.
Things
Why?
Are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up. It's been resilient, and to another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like
growth is going up next year, which isn't great for rate cuts because it means there's no need to really cut rates, and inflation's going down.
Thank you, Mr. Chairman.
Unemployment's looking fine. We might not get that many rate cuts next year, maybe one, until Hassett comes in
terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking.
Guys, subscribe because so much data is coming out. We missed so much data because of the shutdown. It's going to change everything. So subscribe, and then we'll give you
more than a year, because inflation was high, very high, and unemployment and the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us
He's
to
explaining
do,
why he cut rates. There's going to be so much data coming out. That's going to even be more volatile than FOMC. So subscribe to the newsletter, subscribe to the chat, because we're going to give you the cheat sheet. We're going to go through it all for when that CPI data comes out next week or next soon. That's going to be the most volatile thing, because we haven't got data over the last couple of months because of the shutdown, and we will get it all together in one data release.
We now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So it is, the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time, so it's basically a good thing, but that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the two official dissents against a cut, but there were also soft dissents from 4 others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly
magic number in 1 minute. If you're here for the magic number, if you don't want to know what it is, take note of it.
Sure. So let me just say,
I am incredibly sorry to interrupt this, but Martyn's told me that in 1 minute I'm giving the magic number. That magic number is, you add all 3 together, you can win $2,000 worth of XRP. So in 1 minute I'm giving you a magic number. Stay with me.
He agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened.
And just in case, I never pause live streams, I just mute them, so we're still up to date.
You weight those risks, and what does your forecast look like, and where do you ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the two parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately, having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical
Okay, if you're here for the magic number, if you don't know what I'm talking about, just take note of it. I'll explain it later. The magic number is 700. The magic number is 700. Straight back to Jerome Powell.
That the data may be distorted, and not just sort of more volatile, but distorted, and And that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data.
So much data coming out, so much data. We're going to analyze it on the show. We're going to tell you about it. It's going to be in the newsletter as one more of these cheat sheets. Today, you got the cheat sheet for Fed. We're going to give you more cheat sheets later today. Well, the analysis of today. I'm going to bring you the full analysis of his speech, the full analysis of the SEP data, all after the show. So stay with me. Jerome Powell is live with us right now. Hit the like button and subscribe.
One more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive?
Guys, don't write the number in the live chat. What are you doing? Keep it to yourself. Write it down on a piece of paper or write it in your notes. Don't write it in the live chat. What's going on?
Well, I don't. I would say, again, these are good, thoughtful, respectful discussions. And you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick. Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead.
She's asking why
it'd be
cut.
good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So
interesting. This is going to move the markets.
I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month.
He's saying unemployment's the issue, which is good for the markets. That's really good for the markets.
Both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually.
S&P love that. Look at that, S&P highs of the day. On that statement there.
In terms of inflation, it's going to come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say
S&P
that
loves
this was a decision to make.
What's bad for the economy is good for the stock market. Look at that.
And but overall, that was the judgment that we made, and that's the action we took.
Just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our two
Full analysis
goals.
coming up.
And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to take a balanced approach to the two things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to, and I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say. And that's what we're doing now.
Good.
It so happened that we've cut 3 times. That, we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
S&P 500 highs of the day, up nearly 1% now.
Thanks, Mr.
Gold
Chairman.
up,
Edward Lawrence,
silver up.
with Fox Business. I wanted to ask you,
XRP,
the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening.
Rate cuts, mortgages
up. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very that's one part of it is inflation compensation break-evens, and they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their #1 concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their #1 concern, inflation?
Guys, hit the like button, subscribe for analysis coming up.
We have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages, so that people are earning enough money and feeling economically healthy again.
Victoria. Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people.
He cut 0.25% basis points if you've just tuned in.
We're well aware that this
is the like button
a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry, about the labor market, because the labor market unemployment was very low. If you remember, when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability. And the best thing we can do there is
care more about, jobs or inflation? Let me know in the chat. Jobs or inflation?
Make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody, they have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low, if there were big numbers of layoffs, you'd
10-year yield coming down, that's good.
The continuing claims to go up, and you expect new claims to go up. It really haven't much.
Oh, here we go. XRP's waking up.
But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
on the policy what?
On the committee.
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people in both.
Guys, the full analysis is coming up, and this is going to end in 5-10 minutes. So full analysis is coming.
Given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine. Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. What we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages.
Here we go.
Pandemic period,
Ethereum is now up 4%.
And caught the really low, so it's made expensive for them to move. And we're a ways away
Silver
from
is
that changing. Also, we're just
$61.65. Congratulations.
So
Bitcoin is now moving.
We just need more housing of different kinds. So housing is going to be a problem, and really the tools to address.
Here we go, guys. Let's get some hype in the chat. Let's start getting excited.
Rates, but we don't really have the tools to address.
Everyone start getting the chat rolling. For analysis in 11 minutes time.
Chris.
Thanks, Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods.
XRP in the chat. Everyone says XRP.
Most of us that inflation will be a one-time price increase and then come down.
Here we go.
Just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? That's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think, again, all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but
I love the chat. XRP. We love it.
Assessment we made.
Remember, guys, 80% in XRP I am.
Hi, Chair Powell.
I love XRP, I just don't love terrible price
This has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman Mark Hamrick with
Last question. Don't leave after this. I've got 4 analyses.
Elevated, the reductions in the federal funds rate means that savings rates, or yields, to be more precise, have peaked, while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave. Sort of every large economy in the world, every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
This is the Fed Decides on Bloomberg Television and Radio. Fed Chair Jay Powell wrap.
Okay, stay where you are. Behind the scenes, so much work has just been put in. We've got the analysis of the speech. We've got the analysis of the SEP. We've got the analysis of the Q&A. We've got every analysis you can think of. I'm also going to tell you exactly what I think about XRP, silver, gold. So stay with me for another 10 minutes. What I'm also going to do is give you a link to Martyn's show. He's going to give you the magic number soon. So I'll tell you when he's going to do that and I'll give you the link. But firstly, congratulations to everyone who had that had that cheat sheet. If you haven't heard about our newsletter yet, and I know some people will say, why are you talking about it again? Well, because it's FOMC Day and we don't do 50% deals that often. And remember, we don't take any corporate sponsorship. So this is how we survive, I guess. So the newsletter's here. We put in so many hours of work. This is the version 2 upgrade now, where we've got so many new features. But today, one of the new features implemented was the Fed Day cheat sheet. So today, you have the whole timeline. You had what to look out for, what's happening. You had, each of those charts to look at. We said 25 basis points. What would happen if it's the other ones? But the chance is 88%. We had the statement, what to look out for, what not to look out for, and we got one of those main statements. We got it to you before the pump. So congratulations to anyone who took that trade. We have the SEP. We're going to analyze this even further. We had the flow charts for all of this, what to look out for, why, look for this, look for that. This is Dovish, this is Hawkish. And going in order, look at this first, then look at this. Anyway, I'm not going to explain it all so much, but there's the dot plot. I don't want to give it all away either because this is all for members. You get the press conference which happened, Dovish triggers, Hawkish triggers. We're going to be implementing all of this. You got the technical chart analysis. Every single stock I'm looking at, silver, Bitcoin, XRP, the S&P 500, my trades on that. We're going to be looking into 2026. So this is such an important article at the bottom of that today's okay, here we go. I'm going to send you to Martyn. Okay, 1 min sending. Okay, so, and you get the into 2026, the Civil War. So you get a quick, very, very important story about 2026 in the Fed. And then good news, bad news. You're also going to get, in about a few hours' time, a full analysis of the speech, full analysis of the SEP, full analysis of the press conference, key quotes from Powell. We're going to compile it and give you my final thoughts. So even if you didn't follow along with the cheat sheet, I'll tell you the answers as well. So you had the cheat sheet, you had the exam, did you pass, did you fail? Well, I'll give you the answers to it as well tonight. That's just one part of the newsletter. If I just show you this very, very, very quickly, you get full access to all of that. You can see what other newsletters are like. You can see what the free tier is. We do have a free tier, but you get a chart analysis course, one-on-one DMs, apps. You get financial planning apps. You get portfolio insight apps. You get deep research. You get a daily newsletter, get you prepared for the day. It's the best newsletter out there. I'll tell you more about it in a second. Magic number of Martyn. That's the link in the chat. I'm also going to give you 50% off only today. Link is in the live chat. Link is in the live chat. Okay, So Martyn is giving a magic number. Add all 3 magic numbers together and you got a chance to win $2,000 worth of XRP. I'm going to give you some more analysis now. But if you haven't heard about that newsletter or if you've ever been on the edge, today 50% off. When those new features roll out, we're not going to increase the price for you, but we might increase the price in the future. This is going to be the best tool in your toolbox when it comes to investing and making money. Daily newsletter is incredible. 7 hours, maybe that's a bit of an exaggeration. I think about 6 hours of work goes into it, but because we've really, really dialed down the workflow and we know exactly what we're doing, deep dives take hours of research. The app is taking months to build. So much coming for less than a coffee a week. Okay, so Martyn is giving the magic number now, so I'll give you the link to Martyn's show once again. So Martyn, let me send everyone over to Martyn once again. Magic number, if you want to win $2,000 worth of XRP, you can go grab this magic number from Martyn, and then you add it up with the other magic numbers and you can win $2,000 worth of XRP. Let me go back to Martyn.
We got a pause as expected. It could have gone either way. We
follow along with the cheat sheet. Okay, there it is. So let me, that's me playing on Martyn's show. God, there's some sort of matrix going on. Let's go back. I'm going to listen to Bloomberg for 5 minutes and I'm going to bring you the full analysis after. Here we go.
I think that's right. I think we're going to be in an environment where inflation is gradually moving lower. If you were to ask most forecasters by this point, Would inflation actually be running just around 3%? I think no. I think the pass-through on inflation has been a lot less than many had anticipated. Margins have been kind of okay.
Right.
It's gone a lot better than most forecasters
We had a
thought.
one of my interviews of the year was Nancy Lazar. We had Nancy Lazar at the beginning of the show, and she nailed it when she said there's all this Fed mumbo jumbo, but it's just a cyclical slowdown. Do you bet at Wolf Research in a cyclical recovery here, as Anna Wong alluded to today?
Yeah, I think that's right. And I think we're starting to see signs of it. Of course, it's mixed at best. Jolt opening starting to pick up. You're seeing temp hiring start to look a little bit better. It seems to be just a cyclical slowdown, in part driven by tariff-related uncertainty. As that uncertainty starts to fade, you're likely to see an improvement in growth. The Fed's probably not going to cut
Full
through
analysis
for half
coming
of next
up.
year. And it's going to be an environment where the economy's running fairly firm.
Something that you noted is that this had a sort of dovish tilt to it. I think it's really important to note that, and that's certainly the response that we're seeing in markets across the board. They talked about weakness in the labor market. Jay Powell was talking about 40,000 jobs getting created each month, saying you can downgrade that by about 60,000 if you take looking back.
Thank you for bringing this up.
All of a sudden, you're looking at implied weakness that they're sort of bringing forward from the report that we're going to get next week. How credible do you see that, especially given the guidance that he kept emphasizing that they hear from the regional Fed districts?
I mean, I was surprised by his estimates on QCEW, the assumptions that it's going to be a 60,000 downward revision. My estimate is about half of that. So that was a pretty dovish statement. That was the sort of the higher end of what it could have been.
Very
suggesting
dovish
that at
statement.
least his view on the labor market is we've been running minus 20,000 non-farm payrolls for quite some time. That's pretty dovish. I think what will surprise most folks is in the next couple of months you'll probably see a bit of a bounce back in terms of hiring.
You were on the phone talking with your children about Alonzo from the Mets to the Orioles, and you missed when he talked about the job adjustment, the market moved.
Yeah.
I mean, the fact is the market, the bond vigilantes walked away and he got a price up, yield down at that moment.
Yeah, I mean, my son actually messaged me, could I please have money for more food to cope with Alonzo signing with the Orioles? And I gave him $2 because inflation
big spender, $2.
That, frankly, is all that's worth to me. So anyway, we're looking, though, at essentially a message from the Fed that you can have your cake and eat it, too. That this inflation, from the most part, was driven maybe by the tariffs, but that is transitory, for lack of a better word. And going forward, there is going to be this productivity boom that's going to help support things. How much does this really line up with 2 more rate cuts in 2026?
Okay, very close to full analysis. I'll bring it forward a little bit.
To either more rate cuts or potentially a rate hike?
I certainly don't think there'll be a hike, and it seems like Powell dismissed that too. I think you could see some more rate cuts in the back part of next year, because what you'll likely see is the first part, you might elevate, inflation should still be a little bit elevated. You're going to see that cyclical pickup. In the back part of next year, you might start to see the economy cool down a little bit, and then inflation's likely to slow back down, because that's where you're passing that peak of tariff-related inflation. And that could be an environment where they could cut a couple more times, albeit slowly. And that's because you're going to see a sort of a fairly sluggish job trajectory. And if they're chopping off an extra 60,000 off that, they're going to be even more cautious on the labor market than the payrolls numbers would suggest.
As we speak, Lisa, the 210 vanilla spread goes out to a new, steeper yield curve.
Yeah.
I mean, the bond market's speaking here in spades.
Speaking that, frankly, this is a Fed that's going to lower the front end as much as they can.
Full analysis in 1 minute. Stay with me. Here we go.
There is less control over that. Let's bring back Bloomberg's Michael McKee, who is in that room asking questions. Mike, potentially the last press conference with a rate cut from Fed Chair Jay Powell, a notable one for its somewhat dovish tilt.
Well, I'm not sure it was a dovish tilt. I think the chair tried to keep his options as open as possible. You noted that he suggested that there may be some data accuracy problems with the numbers for the jobs report and the CPI that we're going to get next week. And into January, the catch up from the Bureau of Labor Statistics and the Bureau of Economic Analysis as they get out the data that we missed during the government shutdown. And so I think they don't want to put themselves in a position of saying that we're leaning one way or another. And by doing that, because they've cut so many times in a row, it sounds a bit like they're still dovish, but I don't think that's the case anymore. And you do have some people, and I noted what Stephanie just said, but you do have some members of the committee, the overall committee, who suggested we might see rate increases next year. The thing I think maybe out of all of this that you want to pull out is Powell's emphasis when he was answering my question about we need to see wage increases. And wage increases are going to depend on the status of the labor market. If wages are going up, then people are less concerned about inflation. If wages are not going up, then that's a problem for the American public, and it also is a problem for the overall economy.
Michael McKee, thank you so much, as always, for all your work at the Fed press conference and before. Right now, we are getting comments from President Trump, who's speaking at a roundtable in the White House. He's talking about
breaking news from Trump. Stay with me here.
Jerome Powell,
well, I'm going to give you the full analysis in a second, but Trump is now live.
4% GDP. He has said repeatedly, too late, Powell. Has talked about that guy. He's not doing a very good job, and they would have fired him. And ultimately, this just sort of reiterates this split screen of Jerome Powell on one hand and President Trump on the other, really highlights the political pressures coming down the pike in 2026.
We've got a great headline team. Here's a headline: the president. Don't see why we can't have 20% to 25% GDP growth. I think all of the adults, whatever their belief, dissent here, dissent there, are dealing with a president who's got a very vociferous cacophony of opinions on the economy. You don't plan on Donald Trump's economic vision. That's all there is to it.
He's a debt guy. He's a developer. Of course he wants rates to be lower. He also says that Fed interest rates
We're going to move over to Trump. Breaking news. Breaking
I'm just
news.
wondering, Stephanie, from your perspective, if you had gotten 50 basis points of rate cuts, how much would that have turbocharged 2026?
It would have, but then I'd be afraid that the long end of the bond market would have backed up even more than it has been most recently.
Here we go. We've got some breaking news coming to us. So, oh, what's that noise? Oh, I don't know why that's playing. Let's go over here. No, what's going on? Okay, stay with me, actually. We've got Trump. Let me try that again. We've got Trump speaking, and then I'm going to give you the full analysis of the news. So let me see if I can do something behind the scenes so I can bring that on. So let me go to the live chat. If you want your chat to be put up on the screen, it's your chance now to do that. Let me see if I can fix this behind the scenes. Yes, I can. There it is. Okay, he's been talking a long time. Well, now the FOMC was more important. We'll go over to Trump.
Worse than anything you've ever imagined. Worse than 1929, in my opinion. Instead, we have the hottest country in the world, and we're going to keep it that way. But just to finish, we inherited high prices. We're bringing them down very rapidly, and we're bringing them down to very, very good levels. They'll soon be down at very good levels. Michael, please go ahead.
Absolutely. As everyone in this room probably knows very well, leadership in science and technology has been foundational to our economic and national security for 4 decades. And because of the policies that you have championed and the private sector partnerships that you have made, America currently is leading the world in S&T, and it's benefiting all Americans every day.
I'm going to change the time of
this group of, and many of you know, the president has been arguing for American leadership in AI well before ChatGPT was even invented. The president signed an executive order on artificial intelligence leadership in 2019, which set the stage for the revolution that we're seeing today. In the past year, we've built on that. We signed out the AI Action Plan in July of this year, which the president launched here in Washington, along with 3 EOs. And I know a lot of that effort is around creating a regulatory environment to allow for companies like yours to thrive and for the applications that you build to have the biggest impact on Americans every day. So thank you for everything that you do, and I know we're going to keep working together to make sure that America is the home for the next great technological discoveries.
All right, thank you, Michael. And Michael?
Thank you, sir. Well, look, we greatly appreciate the focus the administration has on lowering energy costs. And energy is the substrate of manufacturing at the industrial level, and really an incredibly important input to the economy. We can't be competitive without a super low cost energy industry. And had a great meeting earlier today with Secretary Wright, and really appreciate all the work that he's been doing. This is, of course, incredibly important when it comes to AI, because it does consume a great deal of power. All the semiconductor manufacturing consumes a great deal of power. Another big area of focus for us is how we can take all this great AI technology, the AI stack of innovative companies here in the United States and sell that around the world. And I'd like to ask Arvind to speak a little bit more about this.
Guys, we're going to give you full FOMC in a second, but this is Trump's going to react to Jerome Powell now.
Everything you're doing for economic growth, as you said. I completely agree with you. Economic growth then drives a lot of other benefits to everything else. We also want to thank you for all the work you're doing on deregulation and making things easier for business to participate in that growth. Michael spoke of the AI stack. It's incredibly important that under the action plans that you have laid out and Michael Kratzer just spoke of, we really help promote the AI stack, which is not semiconductors only. Those are incredibly important, but it's semiconductors, it's software, it's the systems which many of us here build, and it is the software applications on top. The ability to take those to all our friends in countries, so all the friendly countries, is going to be very, very important. And we wish to work with your government to make sure that we can do that, because otherwise we're afraid that competing countries are going to be able to get that stack. So we would say that.
Anything that you're looking at that we can help you with so that you create a bigger and better IBM and hire a lot more people? Anything you need?
A few countries, we'll speak to members of your administration to make sure that those can go and that barriers get lowered for being able to do it quickly. We agree guardrails are necessary, but lower barriers would be very, very helpful.
You mean tariffs?
No.
Because are these countries are they tariffing you? Making your life difficult? Are they doing anything else to make your life?
This is very interesting.
It's the ability to take certain systems which have semiconductors inside them into these countries. So right now, because we have controls on where all the semiconductors can go, then the entire system is restricted. That's what we want to do. The same as
how many countries do that?
Probably a half dozen. So
I can tell you the countries already. I know.
Yes.
I know every country very well.
And
we have ways of combating that quickly. So you'll let me know.
This is going to move the markets. What he says more than Jerome Powell did today.
To help modernize government itself. Because we
guys, stay with me. We're going to the whole FOMC reaction as well. I'm going to bring to you full analysis behind the scenes.
We worked with Commissioner Frank Bisignano to help make Social Security better. So I would like to thank you for your help on that. And we'll work with him on making IRS.
He's done a fantastic job.
He is. Frank's great.
He's done a great job, Frank. He's had a great career. Actually left.
If you can hit the like button and subscribe. Remember, this is a new stream. Hit the like button if you came over from Martyn.
And he was at JP Morgan Chase, and he's doing he did a great job at Social Security, quickly.
And we hope to help him replicate that now at our results.
Very good. Thank you very much. Good job. Cristiano, please.
Yes, just a few points. I think, first of all, Mr. President, thank you for your vision. Thank you for understanding the importance of the American private sector in industry, and the growth of the economy. I want to just build on some of the things that were said by my colleagues. I think we have built probably one of the most advanced technologies in the world, and part of it is because I think the
Addison Halson, yeah, I'm going to give analysis in a few minutes in case you didn't know.
That it has been American technology for the world. So I think we have an incredible opportunity when I think about what
guys, I'm in the room
about exporting AI. I had a conversation with Secretary Howard. Now that the trade deal's been made, is an opportunity to really build on those trade deals and export, American technology. And also, as we think about the technology, it's an important vector to drive.
I think when it comes to Q&A, we're going to see Trump react to Jerome Powell's rate cuts.
I think there's a big opportunity. I think it's the next.
Trump can move the market more than Jerome Powell, that's for sure.
That we can build on those trade agreements, and I think he resonates what also Arvind said about the importance of
If you want to enter the $2,000 giveaway and put those magic numbers in, here is the link.
There are two exciting things happening in the world of technology coming right now. One is as AI become the new form of
computing. If you want that 50% deal ending soon,
not only to the
here's
data
the link.
center, but to everything, to cars, to PCs, and we see now the ability to run models that you can only run AI in the data center. You can run that on a microcomputer, on a computer for Enrique, on a server, with small server on premise. So I think we're going to see the proliferation of AI. The other one is 6G. We had made a commitment working with your administration, working with FCC. We're going to accelerate 6G. We're working
First
to
number was
launch
with Martyn.
first in the
Second
world
number
in
was
the
with
LA
me.
Olympics.
Third number was with
and
Martyn.
I think that's another opportunity for America to lead in the next wireless evolution. So thank you. I thank you for the opportunity. Thank you for the partnership. And we're going to be hard at work, I think, driving that agenda.
So we're into 6G now. I just finished 5G. I was a leader on 5G, getting that done. And now they're up to 6.
Let's do it again.
What does that do? Give you a little bit deeper view into somebody's skin? See how perfect it is? I like the cameras the old days. Sort of just had a nice feature. Now they cover every little. Let's see, Michael, you're in good shape. You're not gonna. But I tell you, it's the 6 is coming, huh?
It's coming.
Does it ever end? And what happens? You'll be into 7, right? Before 6 gets old, you'll be into 7. Anybody have anything else to say? Anybody?
I think that the other thing is we want to thank you as well for the openness of your organization and your team. We always find people that wants to hear what we need and is willing to design programs that will support us. So thank you for.
Well, we're here to. We want you to just dominate the whole world in terms of what you do. It's a very important world, and you're doing that. And we're making it easy for you, and that means you're going to do it faster. It's more jobs, and a lot of good things happen. Right? Go ahead, please.
Mr. President, you may not recall, but in your first term, you actually sponsored the Department of Energy to build the largest systems ever built. And thanks to your sponsorship, the Department of Energy owns the 3 top supercomputers in the world. Yep. And we build them with them. And these are systems that can do quintillion operations.
Let's see if we get analysis from Trump about the FOMC. Then we'll give the full analysis, and then I'll tell you about the newsletter.
So I know we're going to build the next generation again.
Good. Sounds good to me. Any questions, please?
Mr. President. Thank you. Can you explain a little more about this Venezuelan oil tanker and share a little more information?
Well, I'll let the people do it, but you see the result, and I guess they probably have released the pictures by now or pretty soon. You'll discuss that with the appropriate people later on, but no, it was seized for a very good reason.
Sir, there's a new proposal from DHS that would see tourists from a lot of countries have to hand over 5 years of social media history to get a tourist visa. Are you concerned at all that if that's implemented, there would be a decline in tourism next year? And what sort of material do you think is...
We're doing so well. We just want people to come over here and safe. We want safety, we want security, we want to make sure we're not letting the wrong people come into our country. We're getting rid of a lot of bad ones from jails, from mental institutions, drug dealers. And we're getting a lot of bad people, murderers. 11,888 murderers, half of them, almost exactly half of them, committed more than one murder. We're getting rid of them. In some cases, we don't even want to get them out. We put them in jail because we're afraid they're going to come back into our country. We're not going to let them back in. So we've taken a very tough stand. And you see where we've been, like Washington, D.C. now, people walk down the streets. They go into restaurants at night. It's beautiful. It's like this beautiful thing to see because till I got here, this was a very, very bad place. We had a terrible thing happen 2 weeks ago with terrorism with regard to 2 National Guards people that are so phenomenal. One is no longer with us, and one, amazingly, we weren't looking with great hope on that, that Andrew.
We're hoping he comments on Jerome Powell.
Today he got out of bed, actually, stood up, didn't say anything. It's a little early, but the chances of Andrew, other than his mother, who said, nope, he's going to be okay. His mother was the most positive person. And
have a quick look at the markets, how they're reacting to FOMC.
Made progress. It was,
gold, highs of the day.
Both of them were so bad.
Silver, highs of the day.
That one could survive.
XRP slightly down. ETH slightly down, but up on the day.
The Nobel Peace Prize. And she led Venezuela at a great risk to make it to the ceremony. There is a risk she could be arrested, actually. What would happen if she's arrested? What message do you send, or would you send to Nicolas Maduro?
Well, arrested by who? The Nobel Prize Committee? That's probably the ones that would arrest. I don't know anything about it. She was very gracious. She said I should have gotten the Nobel Prize, and I don't, I'm doing this to save lives. I'm not doing it for any other reason. But no, I don't like if she would be arrested. No, I wouldn't be happy with that.
Mr. President, Senate Republicans currently have a healthcare proposal that would take away, let those ACA subsidies expire, and then put about $1,000 in people's HSAs. Do you think that is enough money, and how do you ensure that people who will see those tax subsidies expire won't see their healthcare costs skyrocket?
Guys, here we go. It's a Q&A. This is when we will get an question about Jerome Powell.
Now the unaffordable, because it's unaffordable. It used to be called the affordable, but it was never affordable. It was always bad. It was basically designed for the benefit of insurance companies. And what we're doing is we want all of the billions and billions of dollars that went to insurance companies to go directly to the people, and they can buy their own health care. And people love it. I don't know if the Democrats are going to approve it because they want the insurance companies to make money. It was a scam. Obamacare was a scam. But we're going to see. I mean, the Republicans, I can tell you, want the money to go to the people. And we're winning that battle. The Democrats are having a hard time with it because they're in the pocket of the insurance companies. Yes, please.
Yes, we spoke to some European leaders today, I think, sir, about Ukraine.
Please do subscribe.
About that, and is there a new revised peace plan that Ukraine has presented?
The leaders of France, we spoke to, and Germany, and UK, all very good leaders, very good friends of mine, and we discussed Ukraine in pretty strong words. And we'll see what happens. I mean, we're waiting to hear answers before we progress. You know, we're not spending any money in Ukraine. We're selling basically missiles and everything else to NATO, and NATO's paying us, and then they distribute it to who they want. I guess they're mostly distributing to Ukraine, but we're not spending money. But you know what we are? We're spending a lot of time and a lot of effort. Because last month, 27,000 soldiers were killed. Both, think of it, 27,000. That's if you take a football game and take half the stadium, that's 27,000. So 27,000 soldiers were killed. Russian and Ukrainian soldiers were killed. And I want to see that stop. We'll find out. Look, there are a lot of things happening right now. A lot of people say it's closer than it's ever been. It's a war that would have never started. If I were president, would have never started. It's a war that should never have started. But we'll have it figured out, I think, within a pretty short time.
You say very strong terms, sir. Could you explain that?
Well, I think we had some little disputes about people, and we're going to see how it turns out. And we said before we go to a meeting, we want to know some things, you know, they would like us to go to a meeting over the weekend in Europe, and we'll make a determination depending on what they come back with. We don't want to be wasting time. Sometimes you have to let people fight it out, and sometimes you don't. But the problem with letting people fight it out is you're losing thousands of people a week. It's ridiculous. The whole thing is ridiculous.
Mr. President, two questions. One, the oil tanker. Who owns that oil tanker?
You'll get that information later.
Okay, and have you spoken to Maduro since your last conversation?
No.
Or has it only been one conversation?
No.
And when you say that the European leaders want to have a meeting over the weekend, are you talking about with Zelensky or with them?
With Zelensky and us.
And you said in an interview yesterday that you think it's time for Zelensky to start accepting things. What things are you talking about?
I think he has to be realistic, and I do wonder about, you know, how long is it going to be till they have an election? You know, it's a democracy. It's a long time. They haven't had an election in a long time. It's losing a lot of people, and it's possible that the people, you know, if you look at the polls, I will say 82%, there was a poll that came out, 82% of the people are demanding a settlement be made, Ukrainian people. They want to see a settlement be made. I understand that. They're losing thousands and thousands of people a week. They want to see it ended. And I do say, you know, at what point, when do they have an election in Ukraine?
We're at the Q&A phase with Trump. Let's see what else comes out. Full analysis of the FOMC.
Corruption.
The rate cuts, my thoughts, my trades, the newsletter coming as soon as this ends.
When do they have an election? Are they going to have an election? Or are they going to just keep it going like this? So I think it's time to get that war settled. And I think it's a war that can be settled. But it takes two to tango.
Mr. President, Warner about the new owners of Warner Brothers Discovery to make changes at CNN, big changes, and have you spoken to Jared about it? What are you doing with him, or are you just sort of walled him off a little bit?
So what do you want to know?
What changes do you want to see at CNN under new ownership?
Well, I'm not involved in that. I will be probably involved, maybe involved in the decision. It depends. Good companies bidding on it. I think the people that have run CNN for the last long period of time are a disgrace. I think it's imperative that CNN be sold, because you certainly wouldn't want to put people, just leave those people with some money, good money, and CNN, so that they can spend even more money spreading poison, because it's lies. It's a disgrace. So I wouldn't want to see the same company end up with CNN, the same company with money, because right now they don't have too much money, but they have value, I guess, based on the bids. So they've got value. But I think CNN should be sold, because I think the people that are running CNN right now are either corrupt or incompetent.
And that'll be a factor in the decision making, because we've got some.
Well, in my mind, but I can be talked out of that by some very talented people that we have, antitrust people. But I just think that the people that have run CNN into the ground, by the way, nobody watches, very few people watch. I don't think they should be entrusted with running CNN any longer. So I think any deal should be guaranteed and certain that CNN is part of it, or sold separately. But I don't think the people that are running that company right now and running CNN, which is a very dishonest group of people, I don't think that should be allowed to continue. I think CNN should be sold along with everything else.
Sir, you spoke about affordability earlier in your remarks and yesterday in Pennsylvania.
I had to update the timer because this is going longer than expected.
And are you worried at all about the Democrats winning a couple more things in Miami and Georgia?
I don't worry about it. It's like statistically, it's amazing when you win the presidency, even if you win by a landslide like we did, and even if you do a good job. And
here we go, crypto coming down.
Opening 10 months.
Here's the reaction.
In the history of the presidency. I think
oh, God, here we go.
Who's done better? We ended 8 wars.
Silver holding up.
We have the strongest economy. We have $18 trillion coming in, which is more than any country had, times I think 5 or 6. 18 trillion is a lot even in your standard, right?
Yes, sir.
Even for that guy, 18 trillion is big numbers. But we have $18 trillion coming in. Pretty amazing, right? I think Qualcomm would be very impressed if they had even a little piece of that. So we've done a great job. But for whatever reason, and nobody's been able to give me an answer, when you win the presidency, you seem to lose the midterms. Even if you win the presidency by a lot and you do a great job as president. Some presidents have done good, and they've lost, I think it's like 2 times in the last many, many years it's been won. I don't know why. It doesn't make sense. Usually I can figure things out, but I don't know why, but that seems to be. But other than that, we should win because we're doing great. The economy is roaring. I think the economy is only going to go, better with all this money pouring in. We have factories being built. And forget about AI. We have AI more than anybody. We're leading AI by a lot. But we have many car companies coming in from Canada, from Mexico. They're coming in from Mexico. They're coming in from Canada, from Japan, from Europe, all over Europe, Germany, all over Europe. We're doing great. But for whatever reason, it doesn't matter how well they're doing, good and bad. The bad you understand, but even when a president is doing well, they seem to not do well in the midterms. So we're going to try and change it. There should be no reason for it. If anybody at the table can figure out, Bruce, a nice psychological reason, but so I want to win, and winning the midterms is important. People want us to win the midterms, and I think we have great spirit. We should win the midterms, yeah.
Under Joe Biden's administration, during COVID specifically, Biden removed the safety standards on abortion drugs. Now I'm hearing from a lot of pro-life.
I want to congratulate everyone on the newsletter who got it. The trade has been completed on the S&P 500. Congratulations.
Yeah, I don't know. I'll find out. I'll ask them.
Do you want to see it?
I don't think they're slow walking anything, but I'll find out. Yeah.
Mr. President, any update on the clashes between Thailand and Cambodia, sir?
Yeah, I think I'll have to make a phone call. I was going to say that the Thailand and Cambodia, one of the 8 that I settled, they've been fighting for a long time. They've been fighting for a very long time, many, many, many decades. But I got along great with both.
The bell is going in 3 minutes.
2 great leaders, 2 great people, and I settled it once. I think I can do it pretty quickly. I think we're scheduling a phone call tomorrow.
Mr. President.
With Thailand.
On the Fed chair.
With Thailand, if you know, just to answer Steve, with Thailand and Cambodia, I think I can get them to stop fighting. Who else can do that? Think of it. Settled 8 wars. Every once in a while, one will flame up again, and I have to put out that little flame. I have to put it out, but we're going to put it out again. So I think I'm scheduled to speak to them tomorrow and see if I can. It was unfortunate what happened. I mean, I know exactly what happened. It got it started a little bit, but we'll see if we can put it out.
We're interested in the seizure of this tanker.
Silver looking great.
Well, we keep it, I guess.
Where does it go? What port does it go to?
Well, you have to follow the tanker. You know, you're a good newsman. Just follow the tanker.
Do you know where it was going? Was it going
Follow
to
it. Get a helicopter and follow the tanker.
Is it true it's going to
But we're
Cuba?
I assume we're gonna keep the oil.
Mr. President, on Fed Chair, Kevin Haskett said you were
Here we
going to
go.
announce your decision within the next 2 weeks. Is that
Important.
correct?
Who's the next Fed chair and when?
Are you doing your interviews with finalists today?
Well, I'm meeting with Kevin Warsh today, so I'm meeting with him, and I sort of have a very good idea what I'm looking for. Again, I'm looking for somebody that will be honest with interest rates. That's all. I just want honesty. Our rate should be much lower. Our rate should be the lowest rates in the world. Because all these countries that you see, you know, with low rates, many of them are low because of us, because they suck so much money out of us. But that's not happening anymore. We should have the lowest rates in the world. And without us, none of them really exist as an economy. I mean, I can show you these really prime, really wonderful countries. They've had nothing but success. It's because they took so much out of the United States. I mean, it's one of those little problems. I want to see that when we do well, we're rewarded for doing well, not the way it's been for the last pretty long period of time.
Are you asking for finalists to pledge to lower rates? Are you asking these finalists to pledge to lower rates if they become the chair?
No, I'll be asking questions and I'll be able to figure it out.
Mr. President, we have 3 countries sending drugs to the U.S., Mexico, Venezuela, and Colombia. And you talked to the president of Mexico, you already talked to Nicolas Maduro. Have you considered talking to the president of Colombia, whom you call a drug dealer?
No, I haven't really thought too much about him. He's been fairly hostile to the United States, and I haven't given him a lot of thought. He's going to have himself some big problems if he doesn't wise up. Colombia is producing.
If you have
a lot
just
of
tuned in,
drugs.
hit that like
They have
button on your way
cocaine
in.
factories that they make cocaine, as you know, and they sell it right into the United States. So he better wise up, or he'll be next. He'll be next too. And I hope he's listening. He's going to be next. Yes.
Mr. President.
Because we don't like people when they kill people. And they sell drugs, they kill them in the United States. And Colombia is a major manufacturer of drugs, meaning cocaine in particular, as you know.
Thank you, Mr. President.
Thank you.
Multiple House Republicans in recent weeks, days, have been critical of Speaker Mike Johnson. I wanted to ask you if you're still confident in the Speaker to keep his conference together ahead of the midterms, and how often are you speaking about him?
I think Mike Johnson is great. You know, he's had a majority of 2, 3, 4, then back to 2. We actually had 1. So we were 1 heart attack away from disaster. So everybody prayed for everybody's health.
Markets
I think
closed.
Mike Johnson's been a fantastic speaker.
Mr.
A
Bell.
very hard job because when you have a small majority, and we got the biggest bill in the history of our country approved. The Great Big Beautiful Bill. I call it the Great Big Beautiful Bill. There are different names for it, but to me, it's a Great Big Beautiful Bill because it gives the biggest tax cuts in history, the biggest regulation cuts in history. No tax on tips, no tax on Social Security, no tax on overtime. I think Mike Johnson's been a great speaker. I think few people could have done that job.
Do you want to see another big package move through Capitol Hill in the next year, or?
Well, we don't need it because we got everything. You know, this was supposed to be 17 bills. I think it was my idea, but you know, with the concurrence of people that have done this a long time. And I said, why don't we make it 1 bill? Because it's very hard to get things approved by the Democrats. And it worked out because there was something good for everybody. If we would have done 17 bills, we wouldn't have gotten a third of them approved. It was something great for everybody in the one, the great big beautiful bill.
Yes, good to see you, Mr. President.
Hi.
I follow up on the event last night in Pennsylvania. Huge crowd turned
Yeah,
out there.
big crowd.
It seemed like Rally Trump was in prime condition last night. You enjoyed it. Can you just give me your thoughts on that? Then I do have a question on the gold card.
Last night was amazing in Pennsylvania. We had a tremendous crowd. It was like freezing. And the thousands of people on the sidewalk trying to get in, or the streets. It was an amazing evening, actually, and I think people really enjoyed it. I enjoyed it. You could tell that.
I can tell that you enjoyed it.
I enjoyed it. I really did. Well, it's easy to enjoy when you do a good job, and when you can talk about things in a very positive way. It's hard not to say it. We have potentially the greatest economic boom in the history of the world. It's being built right now. And when it opens, there will be nothing ever in history like what's happening in our country. And, Washington, D.C. is safe, and Memphis is now. Look at Memphis. Crime is down 60% in Memphis. We just got there 3 weeks ago.
Okay, let's have a look at the markets as well.
We're going to have New Orleans. New Orleans was we just sent a group of people there, and crime is down 28% in about 3 days. We do a good job.
This is after FOMC. Trump is live speaking right now.
They're very tough people if they have to be. They're very good. They're great patriots, but they are the toughest, and they don't take any nonsense. And every place we go, we knock down crime. Too bad that we're not invited more into Chicago, because we could save Chicago very quickly. But even that, we're doing it on a minimal basis until, at some point we'll just go in and do what we have to do if the governor doesn't wise up. They got a bad governor, they have a bad mayor. I would say they're both incompetent, but it's hard to believe that people don't want to stop crime. We could stop the crime in Chicago in about 2 weeks. Go ahead.
My question is on the gold card. I apologize if I missed the answer to this. Is there a limit to how many gold cards these companies can buy?
Howard?
So the program is part of the already approved visas. So we're just going to have great people come into this country. The average green card holder earned less than the average American. So they were more likely to be on the dole and be on our assistance programs than average Americans. And the idea is from President Trump, he wants to raise it, bring in the best people into America. So same visas, but now just full of the best people.
Basically, it's a green card, but much better, much more powerful, a much stronger path. And a path is a big deal. Have to be great people, but much stronger path. And it also, in addition to that, helps companies, because not only for companies, but if IBM gets somebody #1 in his class at the Wharton School of Finance, and you're dying to get the person, but you can't guarantee the person stays in
Oracle
the
earnings have just come out, and it's
oftentimes they'll
not
say,
good.
I'm sorry, sir, you got to get out of here. You have 24 hours.
Oracle
left. And you say,
earnings,
where's my employee?
not good.
Now IBM can buy a card, and that employee can be there for essentially a very long period of time.
Mr. President, could you tell
It's so needed for the companies. It's needed for others, but really it's basically a much better form of a green card. And you can't get green cards. They are impossible to get. This is much better than a green
I don't
card.
have the numbers yet, but it's not reacting well right now. 6% down now, Oracle.
I haven't spoken to, first of all, he's a friend, she's a friend. These are two great people running.
This will bring the market
I hate to see them
down.
running against each other. I hope they're not going to be damaging each other. But
Down
Elise is
7%.
fantastic, and Bruce they're two fantastic people. And I always hate it when
Oracle
very good
Corporation
friends
have their earnings today,
and I hope there's
and
not a
they're
lot
down.
of damage done. Sometimes it works the other way. The victor ends up being much stronger because of it. A lot of times that happens.
Adobe
in politics.
earnings were good.
Well, I think in New York we have a convention toward the end of February, and I think you'll know pretty much at the end of February what's going to happen. And I'll probably have to
Oracle
do what I want to do.
Oracle.
I hope that he's running now, as you know, and she's running.
Their revenue was the
They're
same as
very talented
estimated.
people. Either one should win. Against
Infrastructure revenue was up.
Mr. President, their legacy story lately
Cloud
is
revenue was as expected. They didn't beat on earnings massively. That's the issue.
Of all your cabinet members, who would you perceive as the most under attack?
Well, I think my cabinet's fantastic.
They're just
I read
at
these same stories
consensus.
that I'm unhappy with this one or that one, and I'm not. I think the
It's an
cabinet's doing a great
overreaction,
job.
in my opinion.
I read a story that I was unhappy with Pete because he was attacking drug dealers. I said, that's not exactly right. I would say very much the opposite. Pete Hegseth has been phenomenal. I read a story recently. I'm unhappy with Christie. I'm so happy with it. I mean, we have a closed border. We have a border that's the best border in the history of our country. Why would I be unhappy? She's fantastic, actually. No, we have a fantastic cabinet, really fantastic cabinet. I mean, Lutnick I'll have to think about. No, can't have everything. Can't have everything. He's doing great. Well, Howard's done really well, and Scott's done really well. We have just a fantastic cabinet. I'll tell you who's
please, guys,
doing
hit the
a great
like
job
button.
is Linda McMahon. We're bringing education back to the states where it belongs. Education is going. We can't do any worse than we're doing right now. And let the states run it. You know, if you go back to some of our states that are run so well, so good, I would say 40 of them. And then you'll have trouble with 5, and you'll have bigger trouble with another 5. But you have 35 or 40 states that will run education as good as Norway or Denmark, Sweden. We have some, the heads of the list are Denmark, Norway, Sweden, a few others. I think if you go to Iowa and you go to Indiana and you go to, I can name a lot of states, I think it would be almost the equivalent or maybe better. But you can't run a school system in Iowa from Washington, D.C. Yeah.
So the Gaza plan, when do you expect to announce members of the Board of Peace, the leadership of that?
Well, we'll do it early next year. And the Board of Peace are going to, it'll be one of the most legendary boards ever. Everybody wants to be on it. It's mostly going to be, I guess, we weren't thinking about it that way, but they want to all do it. Basically, it'll be the heads of the most important countries.
Mr. President.
They all want to be on. It wasn't really planned. We thought we were going to get very distinguished people.
I'm getting some more news coming in from the FOMC. I'm going to bring that to you as soon as Trump stops speaking.
They want to be on the heads, the kings, and the presidents, prime ministers. They all want to be on the Board of Peace.
Mr. President, on the video follow-up to last night's rally, can you clarify, you have called the affordability crisis as a Democratic hoax, but you also want to make America affordable again?
No, the word that they use is a hoax, and because they're the ones that caused the problem. I'm talking about when you're trying to say it a different way. Now, it's pretty simple, though, if you listen. It's a hoax where they created the problem. They're the ones that gave the high prices. So when they use the word affordability, they shouldn't be using that word because they're the ones that created this problem. They created the highest inflation in history, and they created the highest prices in history. And now we have to get those things down. But when they look and they say affordability. They never discuss it. They just say the election's about affordability. Well, it may very well be. I think it's also about still the border. You have to remember the job. The sad thing is, for 7 months, we've had no people come through our border. Nobody can even believe it. 0 people. And the people that do that are largely Democrats, which the people that do the stats. We've had no people come in, other than coming in legally. But if you take a look, and nobody wants to talk about that. In fact, last night I said, let me talk about the border. My own people told me, sir, nobody cares about the border anymore. You've fixed the problem. I said, do I get a little credit for fixing a disaster where millions of people
Oracle earnings are bringing
a
the
month
market
would flow
down
into our country, and from prisons and from gangs and from drug dealers and mental institutions? They say, sir, you fixed the border Nobody cares. I say, but I care. It's sad when you fix something and then you can't even use it. You can't talk about it. My own people don't want to talk about it anymore. But very simply, the Democrats created the worst crisis of inflation that this country's ever had. And with that came the highest prices that we've ever had. And I'm fixing it.
Mr. President, has Secretary Hegseth told you why he hasn't released the video of the second strike?
No, he hasn't told me. I thought that issue was dead. You're surprised you bring it up. You must be CNN.
Lawmakers are still
Are you
talking about it
CNN?
on the Hill.
Are you CNN?
I am with CNN.
Oh, gee, I'm shocked. Well,
But lawmakers are still talking about it on the Hill.
I'll tell you, I don't know about lawmakers. Which lawmakers? You're talking about
Most of the
Democrats?
Democrats have
Talking
been talking about
Democrats?
trying to release
I
it.
mean, the people that you work for, the Democrats? You know you work for the Democrats, don't you? You're basically an arm of the Democrat Party. Thank you very much, everybody. I appreciate it.
Okay.
Thank you very much.
Thank you guys.
Come on, you want to talk?
Thank you guys. Turn off the cameras. Thank you guys.
Okay, so Trump's done as well. Wow, what a day it's been. I've been all over the place. We've done so much analysis behind the scenes. We've been live for quite a while, but what's dragging me down is yesterday I was up until 3 a.m., up at 6 a.m. trying to get the newsletter for you guys. Remember, we put a lot of effort into this newsletter. We want it to be the best out there. And behind the scenes, we've had the team working on the full analysis around...
Hello, everybody.
I
thought it was
He hasn't just teleported to a plane. It's just started playing the next stream. So yeah, we've got the team working on the key quotes from Powell, what he said, what it matters. We've also got the changes in SEP. We've got also the FOMC day. What was this about again? God, so much has happened today. Oh yeah, this is the actual report from the Fed today as well. So a lot to go through, plus the analysis, plus the charts. Now crypto's going down. So thank you guys for staying with us. Thank you for joining us for FOMC Day. I hope you have enjoyed the stream so far. The deal is ending in 20 minutes for the newsletter, so do grab it while you can. And also, please hit the like button and subscribe if you haven't done so already. Let's quickly run through some charts and see how everything is doing. The S&P 500 is up 0.68%. It hit our target. Now it's selling off. That target was in today's special edition newsletter for our members. Silver, we have a much higher target. So I'm going to get rid of that so no one sees. But silver is a more long-term target for those of you who are in the newsletter have seen it. It's a much more long-term target. It's not on the day, but it can happen fast. Silver's at $61. I am bullish on silver. Bitcoin has sold off. It didn't hold on to the support of 94,000. Oracle earnings have just come out, and if we just listening to Bloomberg,
of a shortage of capital.
Yeah, but Carol, if you look at it, when they last came out,
I told you overreaction. It's now gone up 3%.
It was oversubscribed. I mean, these companies are not having at this point any trouble raising capital for the data center expansion.
All right, let's go to Adobe.
Yeah, I'm just looking at.
Okay, so someone just came in. A lot of people have left the stream, come to the stream. People have come back from work. People have woken up. So I have to go through everything again for the sake of everybody. So do stay with me. So today, what happened? What's happened so far? If you've missed the day, or if you've been in and out, at 1:30 p.m. Eastern time, we went live. That's 6:30 UK time. We started our analysis of the FOMC at 7 o'clock UK time, 2 p.m. Eastern time. Remember, this is all in our newsletter. This is actually part of today's cheat sheet for the FOMC event. Look, everything moves fast. As you saw, everything moves fast. You have to keep on top of everything, and something like this really helps guide you through the day. And if it doesn't help you guide, and if you're not trading, it just helps you understand the economy. It helps you understand the market. It helps you be more confident in your investors. It helps you not panic buy. It helps you not FOMO. This is just one little thing you get from the newsletter. So yeah, let me I'll come back to why to get the newsletter in a second. But at 7 p.m. UK time, 2 p.m. Eastern time, we had a special data drop. So half an hour before Jerome Powell speaks, we normally get the decision and the statement. Because every quarter we get extra information, we actually got the SEP and we got the dot plots. So the SEP and the dot plots, I've got a full analysis. The team's been working on that behind the scenes. We've also got the decision So if you've just come in, it was we spoke about this. If we could scroll down here, scenario A was a 25 basis point cut. Scenario B was a very big danger zone, only 13% priced in, and that means only 13% of market participants and the market is hedged for that. And that was a pause, and then a very, very tiny possibility, less than 1% chance of a 50% cut. If it was a pause, the markets would crash. If it's a 50 basis point cut, the markets would crash. And some of you would say, wow, actually, a 50 basis point rate cut sounds brilliant. We want 50 basis point rate cut, 1% rate cut. Because it's not priced in, because the market's not ready for it, because it would signal recession, panic signal, we don't want a 50 basis point cut. So thankfully, step one, if you look at here, step one, the rate decision went well. 25 basis point cut. What to look out for. Then the statement. And let's go through the statement. What will be good to hear, what will be bad to hear. So if we go through what actually happened with the statement, remember those 4 bits came out together, so it's very hard to keep on top of it all, and that's why this helps you. So the decision was 25 basis point cut. The rationale, the reason why they did this. Remember, the tiniest word can move the market, and the one thing we picked up on straight away was employment, unemployment worries. So the rationale, the reason they wrote why this is part of a document, we've simplified it, and we're putting out. Remember, if you get the newsletter, not only did you get the pre-analysis, the morning analysis, you're going to get the end of the day as well, where we've now got the answers, and I can put them out to you so you guys know what's going on and exactly what to increase the knowledge there as well. So if you haven't got the newsletter yet, 50% off. It's 15 minutes, and no longer will it be there. 50% off today only. You get all these perks and benefits. Pause the screen, see what it's all about. But yeah, 50% off today only. That's on the annual plan. There's a free plan and there's a monthly plan as well. So the reason they cut was employment worries were rising. The statement explicitly notes that job gains have slowed and the unemployment rate has edged up. Crucially, the committee emphasized that downside risk to employment rose in recent months. So obviously, dual mandate. Jerome Powell. Do I have this morning's newsletter as well somewhere? I'll show you that picture. Yeah, let me go to the live chat while I bring this on. If I go to this morning's newsletter, it was all about the Fed as well. I mean, it was quite. I saw a few comments today saying it was quite a good. They enjoyed today's newsletter. It was all about FOMC. So again, daily newsletter every day. Today's one was focused on the FOMC report. Let me scroll down to where we went through the... Yeah, so remember, dual mandate. Jerome Powell, control inflation, control unemployment. Another key thing to take away is good news. Sorry, bad news is good news. Bad news for the economy is good news for the stock market, because bad news, for example, if unemployment is... and it only applies to certain things. If inflation's up, that's not good news for the markets. If unemployment's going up, or if there's a risk to unemployment, that's bad news for the economy, but good news for the stock market. Why? The economy isn't the stock market. If the economy, if unemployment goes up steadily, that means that Jerome Powell can cut rates, or the Fed will cut rates, bringing lots of liquidity into the markets. Has this just restarted for some reason? I think that's just restarted. What were we at? What time were we at? I don't know why that's restarted. I think we were down to maybe 15 minutes. So yeah. Dual mandate. Control unemployment, control inflation. Unemployment, you don't want to get too high. Inflation, obviously, you don't want to get too high either. And then there was that very important concept in the newsletter. If we scroll down over here, talking about... Where is it? Good news is bad news is good news. The economy Main Street measures the past and present, jobs, wages, GDP. The market Wall Street bets on future liquidity. How do we get more liquidity? Rate cuts. So I just wanted to make that clear. Where should we go to? Yeah, let's go to the statement that came out alongside of the 0.2% cut. Employment worries rising. There was a few people not agreeing with Jerome Powell. Remember that we need to see who's voting for what. And there was more people actually calling for, or there was 3 or 4 people that didn't agree with Jerome Powell. Jerome Powell went for a 25 basis point cut. 1 person went for a 50 basis point cut, and 3 people went for a pause. The fact that there was 3 and not 2 was extra people. It's called dissenters. Dissenters are actually not typically a bad thing. However, if it gets too much, everyone will lose confidence in the Fed and lose confidence in Jerome Powell. So there was an additional dissenter, but that's not really too big of an issue. The balance sheet, we spoke about that. The forward guidance was the guidance remained pretty much the same, so nothing to take away there. But if we're comparing it to previous statement of October, which is what we did in the background, the big change was inflation was unchanged. Their view on inflation was unchanged. It was still, inflation remained somewhat elevated. But jobs, this is what moved the market up. This was the only statement. It was a slightly dovish shift. They moved slightly dovish on jobs. In October, and these slight wordings is what we pull out of these data, and this is what you get for being part of the newsletter. The team is growing. October, they said unemployment rate has edged up but remained low through August. December, what we got today was unemployment rate has edged up through September. The analysis is they removed the qualifying phrase, but remained low. They said that in October, but they didn't say it. They're signaling increased concern about the trend in unemployment. So that increased concern about unemployment essentially means if they're worried about unemployment and that they're actually a bit more worried than last time round, we're more likely to get rate cuts. It's for the newsletter. The website link says 26 more hours. Yeah, that will change. In the background, I will change that when we end the stream. The dissenters, I'm just reading some questions. Yeah, if you want all of it, look, not only did we do a pre-cheat sheet for the whole Federal Reserve, we're going to do a post one as well. That's coming out in a couple hours, so make sure you grab the newsletter. Look, 50% offers. We don't do Black Friday deals. We did an FOMC offer. We don't do. Agree, the newsletter is top notch. Thank you so much, Comic. Thank you so much. Look at all these great comments. Thank you very much. 50% off today only. Okay, so the dissenters. I'm going to put all of this analysis we've done. I'm going to spend another hour after the show and put out another newsletter to really solidify what we've heard today. And then again, tomorrow morning, newsletter again. Daily newsletters, I love it. Absolutely love doing it because I want to take on those big media companies that just spew ads, spew nonsense. They're paid partnerships. They push agendas. We just want to cut through that. And not only just the big media companies, also these small YouTubers and influencers that just come out with random, non-fact-checked information. We want to take on both sides. And that's why you don't see any corporate sponsorship. It's just our own newsletter. So do go check it out. No one can buy our voice on the channel or on the newsletter. No ads at all on the newsletter. The dissenters. So that's the people that didn't vote with Jerome Powell. I'm going to have to go through all of this and put together a newsletter. So I'm going to give you my initial thoughts and also is there anything else? Yeah, so that essentially from that report, so 25 basis point cut came at the same time we got the report, and from the report, the most important part you need to take away is the fact that the wording for employment changed. That was a bit dovish. That moved the markets up. At the same time, every quarter we get the SEP, and this was in the newsletter. Remember, I told you exactly the timelines of everything. The SEP and the dot plot are critical. They're actually only a quarterly release, and this quarter they got released. We got changes in the SEP. I'm not going to tell you all of it now because I'm going to go through all of this and put it into a nice newsletter. But there were economic revisions, and those revisions tell us a lot. So the SEP is the summary of economic projections, meaning this is the Fed saying what's going to happen in the future, and obviously the market reacts to this, and the market will be digesting this over the next few days as well. Their projections are that GDP are going to grow. It's going to grow next year more than expected. So it's upgraded, more bullish for the economy. GDP is growing. They said that the labor market will stay steady. No real risk of a recession or anything like that. And they also said inflation, the outlook on inflation has improved. So they improved their outlook for 2026. Essentially, which actually means they don't need to cut rates. If they believe this, there's no need to cut rates. And that's why there was those questions about why did you cut rates, Jerome Powell, that I told you will happen, happened. So we'll put that all together and tell you exactly what that means in the newsletter. But essentially it means don't expect many rate cuts next year until maybe Hassett, the new Fed chair, comes in play. We might only get one more from Jerome Powell. We'll look at the odds now as well. So the bottom line is, compared to September, the summary of economic projections implies a steady rate path with significantly stronger growth expectations and lower inflation, a pristine, immaculate disinflation scenario. Then Jerome, so if we go back to the cheat sheet you guys got, what happened next? The speech came. Jerome Powell came and spoke, and then there was a Q&A. Later tonight, you're going to be getting your debrief newsletter for the members. Just to give you an idea of what that cheat sheet looked like, for those of you who didn't get it, we went through every step, what to look at first, the rate decision, what's going to happen, and the probabilities. Then we move on to the next step, look at the statement, what changes. And remember, that was perfect because 0.25, you see that in seconds. Then you looked towards the fact that that employment figure changed, and then that was bullish there and then, and the market didn't move on that. Then you look at the SEP, you got the flow chart, what to look for, what not to look for, what's dovish, what's not dovish, what the three things are. Not only is it like a trader's heaven, it's actually more, and I prefer it for this reason. I prefer it because even if you're not trading, even if you don't care about these events, if you read this, your knowledge goes through the roof. And if your knowledge goes through the roof, your toolbox is fully equipped for you guys to make money. If you understand what PC inflation forecasts mean and the sticky problem, and we put it together in such an easy to read format, you can look at that and you will learn something and you'll be like, oh, that's why the markets dump when the unemployment is going down when that's supposed to be a good thing, or that's why good news is bad news, or that's why that's what that SEP is. I always hear the word SEP, Summary of Economic Projection, never knew what it meant. All of these things, these little things, you start reading the newsletter, it's put into a very easy to read place. You will just elevate your knowledge. And when you elevate your knowledge, you will make money. You don't want to be at the bottom of the table. What is it? You want to be on the table with the kings. You don't want to be foraging for crumbs. I don't know what the saying is. Whatever the saying is, that's what we want to do. We want to make some kings out there. You got the dot plot. So yeah, the dot plot also came out, and we told you about that as well. We're gonna analyze it further for the newsletter coming out later today. What else did you get today? You got what to look out for the press conference, all the same things. You got all my technical analysis, the trades I'm looking at, where I'm going to be entering, where I'm going to be exiting for 5 major things there, the S&P 500, silver, XRP, Bitcoin. Then you need to look into 2026. We have a very good article down here about the civil war and the bond trap, about why if you cut rates too quickly, mortgage rates actually go up, and that could be an issue with potentially, and we put it all into a nice diagram for you there. And then also the bad news is good news. So you got all of that as your second newsletter of the day, as a FOMC cheat sheet. In the morning, you normally get your daily newsletter, which has all the top headlines, the 5 stories I'm looking at, my thoughts. Let me just put this on the screen as well, because we're running out of time for you guys to get this deal. I mean, it's 6 minutes left. If you haven't got it yet, you can get it, cancel it. Get it and cancel. You just, if you want to choose it, I don't know. I'm just saying you can get it for 50% off today. Anyway, let me show you what you get. So you get the market news headlines. You get that as a free member. You get that as the premium member as well. You get the stock movers. You get that even if you don't want to pay for it. There's a daily newsletter as well. The numbers do not convince me, says RJD. I don't know what you mean by that. What's the second number? I got the first one. I can't tell you that. Maybe someone in the chat can tell you if they want to, but normally you keep it to yourself. Anyway, if you don't know what I'm talking about the magic numbers from earlier. The link is in the live chat. If you want the 50% off deal, it's in the live chat. Click it. We're about 5 minutes away from ending it. Market news headlines, you get it as the free member and as the premium member. Top stock movers, you get it as the free member and as the premium member. Ad-free experience, we get it as a free member and as a paid member. Sensei's Insights, that's my thoughts. You get more of it as a premium member. So there is a free plan. If you don't have the budget for it yet, or you want to build up to, or you want to see what the newsletter's like in the free version, go and get the free version. There's a monthly plan as well. However, the best day, we don't do Black Friday deals. We did an FOMC deal. Don't normally do deals in the newsletter. You get the chart of the day every single day. In the 2 hours before the opening bell, you get a market brief to understand, get ready for the day, increase the knowledge. You can see the chart of the day, the chart I'm looking at. You get event cheat sheets like you get today with FOMCs, PPI, CPI. You get deep dive research, that's detailed breakdowns every single day in the newsletter. Macro stories, stock reviews, crypto analysis, stories I'm looking at that we spent hours researching. Remember, it's about in total, I would say the time that's put into newsletter is about 7 hours of research for you guys to read in 10 minutes. And that's just the daily newsletter. Forget about this. This was about 20 too many hours what we did today. Hopefully the workflow will get better in the future. That's why I might look tired right now. It's I'm trying to build the best newsletter out there. Specialist emerging tech, we're getting experts to write that for you. We've got a weekly XRP crypto report coming out. Again, it's not like media, which is paid to talk about certain projects. It's not like influencers, which just want to say anything for clicks. You get one-on-one DM access, personal replies from me. I'll reply to you any time, as long as it's on my phone, it dings. If once I get a one-on-one DM, I reply to you. Financial planning tools, we're getting a budget planner, debt planner, because if you're an investor, you want to sort those out as well. You're not in the extra channel. We're here, Humour English. We're in the main channel. You get personal replies from me. So budget planner, debt planner, they're coming soon by the end of the year, hopefully. Portfolio Insights app, that's just so much investments going into that Portfolio Insights out. It's going to be amazing. When that comes out, the price might go up for the annual plan, but if you get it today, you're always locked into the lower price. 50% off now. Next year it renews at the normal price, but you never go higher. And then you got the chart training course. So I'm going to put that together. That's moving over to the newsletter. Full chart training course is going to be part of the newsletter. So you get all of that within the newsletter, plus more, of course, as well. Always adding to it. If you've got 2.5 minutes now. 2.5 minutes. Time is running out. Here is the link. Here is the link. Here is the link. Here is the link. Let me just see if I can show you. If you click that link, it will tell you annual, free. There's a lifetime access plan if you want to support us. There's a lifetime, you get lifetime access. And then there's a monthly. So it will go like this. When you click on the page, it will be monthly, annual, free, lifetime plan, and then a free plan. So there is a free plan if you want to sign up to that. That's all you need to enter the giveaway as well, the $2,000 giveaway. The annual plan is the one that will give you 50% off, and the monthly plan is there for you as well. Let's move back here. 2 minutes to go on that. So I'll suggest getting started on that if you haven't done already. Then let's go over here. These are some of the key quotes from Powell. Remember, I'm going to give you this full after report as well. I'll go off, I'll eat some food, and then I'll try and put this together. Most of the research has been done, thankfully, so it won't take me too long. The labour market and GDP. A quote here is, in a less dynamic and somewhat softer labour market, the downside risks to employment appear to have risen in recent months. Why it moves markets? An unemployment rate of 4.4% is nearing the threshold that historically triggers recession indicators like the SARM rule. By acknowledging downside risk, Powell is signaling that they may have to cut rates to save jobs. So this is a perfect example. Unemployment up. We're worried about unemployment. We might have a recession, but the market, bad news is good news. That's bad news for the economy, good news for the market. So that's dovish, that's bullish for equities. There's quite a few of these quotes. So we also had one here. Consumer spending appears to have remained solid and business fixed investment has continued to expand. Real GDP will rise 1.7% this year. So why that moves the market is this counters the hard landing or recession narrative. After today's report, we've got after today's report, we're not looking at hard landing. We're not even looking at any sort of landing. It looks like growth is solid. The Fed is cutting. It supports the Goldilocks scenario, provides inflation doesn't spiral. It's neutral dovish. So today's report as a whole is slightly dovish. It's slightly good for the market. We'll see how it reacts. Okay, guys, you got 30 seconds. You actually have until I end the show, but you've got 30 seconds. I'm going to end the show now anyway. There is the 50% off. Take it while you can. Let me just check over here. Take it while you can. You actually have a little bit more time, but I'll take it off the screen so I'm going to have to end the show so I can go and sort out those codes so it's not still 50% off. But there is the 50% off deal. Thank you for everyone who subscribed. I'm trying to do the best media channel out there. Wow, I've been working too long. I need to go off the stream. There's so much information here. I'm going to put it into a newsletter for you, or even if you're on the free plan, you'll get some of it. Premium members will get all of it. But yeah, probably best I end the show so I can go sort out those codes. Lots there. It's all going to come out into a report for you. We've got inflation, labor markets, interest rate policy there as well. This was actually a really important quote. I want to bring this one to you. This was one of the most important quotes today. Let me see if we're going over to the extra channel after this. I think we are. I know we're going. Martyn, if you're watching this, shall I go back to your stream or to the extra? Did you tell me? Okay, no, don't worry. I've got it. I know where we're going. So after this, we're going to go over to the extra channel, which is not showing up for some reason. I'll sort that out in a minute. This was one of the most important quotes again. One was that one that we saw in the statement about unemployment going up. Another one was actually in his Q&A, and he said something very strange. He said, there's been something of a systematic overcount. We think about 60,000 a month, so 40,000 jobs officially reported could be negative 20,000, says Chair Powell. So he actually made an estimate of what the revisions would be, and his estimate down on those jobs was 60,000. The normal market might have been saying 20,000, 30,000, but he said, remember jobs numbers come out, they get revised. He said that revision is going to be 60,000. He normally doesn't give away data like that. But that was essentially very dovish. He said official government data says the economy has been, so the official government data said that the economy has been adding 40,000. Jerome Powell came out today and said in his press conference, so maybe he shouldn't have said that, the Fed chair just told the world he believes the economy is actually losing 20,000 jobs. The signal is this validates the Fed put. It confirms the Fed may have to ignore sticky inflation and save the labor market because they believe the economy is weaker than the data suggests. So essentially another dovish thing from the Fed. So if we all in all, bit dovish from Jerome Powell. S&P 500 is up on that. Crypto is just going to be volatile for now until it chooses a direction. We've got all the support and resistance zones in the newsletter. I'll cover it more tomorrow morning. If it's your first time here, hit the like button and subscribe. Sorry, if it's your first time here, subscribe. If you're here, hit the like button. Let me go to your live. Let me go. If anyone has any questions, let's see if I can answer them as well. You can fire away. We'll answer some members' question. Okay, let's read some of these questions. More trouble in the Caribbean may have a chance of higher prices of oil. That's Stephen Lewandowski. Stephen Lewandowski, you should really change your username. Just go into YouTube Studio and change your username so we know who you are. There it is. James 007 says, subscribe to Sensei's newsletter now. Thank you, James, for subscribing to the newsletter. You are now part of the premium list. Stephen Lewandowski is still holding MTD and OXY, as tired as a one-eyed watchdog. God, you won't believe it. It's the first time we put together one of these cheat sheets, and it's a lot of work, but it's worth it. Do you need to download Substack? You don't need to download Substack. If you're doing it on your phone, it might tell you to download Substack. It's sometimes people like the app. The app is normally the way you can like one-on-one DM me, or you can see the community. But the newsletter can be delivered in the mailbox. It can be on the web. It can be in the app. You don't have to have the app, but most people like to have the app. Yeah, again, even though the countdown's finished, you can still get the 50% off deal because I haven't come off the stream yet. Are we in the extra channel? No, you're not. The numbers are not convincing. What's that second number? Let's see if there's any more questions. Okay. I think time to end the show. Thank you everyone for staying with us for this. I hope you enjoyed the show. Gemini is up 20%, really? Oh, have they had earnings? Gemini space. Oh, wow. Gemini is up 20%. Did they have earnings? No, it didn't. What the hell has happened with Gemini? I know it's been crushed. Gemini space is maintained at outperformed by ever. No, that won't be the news. I don't know what the news is around that. I just know it's been hammered, so it's trying to find a bottom. I tried. YouTube won't let me. No, they will, Stephen Lewandowski. Search a tutorial on YouTube. Say, how do I change my username on YouTube? Look at it on YouTube, and then they'll walk you through it. But essentially, I think if you go onto your account, your YouTube Studio, and then find where it says username, it will let you change it. Shame it's not 50% off the monthly plan. Yeah, but you'll make it back on the. I mean, 3 months, 4 months, and then you'll have the annual plan. So, yeah. I apologize. We can't do it on all the plans. It's actually hard to set up a discount for the monthly plan. But I hope you sign up to the annual plan. And if not, I hope to see you in the newsletter in the future. Thank you everyone for signing up to the newsletter. Thank you everyone for joining. time to end the show. Morning show will be live as normal. Morning newsletter will go live as normal. If you haven't got the newsletter, there is the final time. I'll give it to you. Until next time, off to the extra channel. Stay where you are. Take care of yourselves and each other. Bye-bye.